Good morning, good morning, good morning, good morning, good afternoon, family. How are you guys doing? Hope you guys are having a fantastic day. Happy Friday. It's the weekly closure today. We have a very, very exciting day today. The reason why we have an exciting day today is because we're gonna do something really nice. We're gonna do an interview with one of our, can I say team members? I think I can. Because this has been an absolutely incredible journey the last couple of weeks. We're going to do a beautiful interview. I'm looking forward to that. We're going to talk about the Federal Reserve. We're going to see what the FOMC meeting will do live. We're going to watch this together. Besides, of course, the regular trading schedule as well, guys. I'm very, very looking forward to that. We had some pairs we have to go over. Very, very important. We have some USD pairs as well. We have to take in consideration. And yeah, I'm very, very looking forward to today. It's the weekly closure. This was a relatively good week. We had some good profits this week. Many different layers that we have to go over right now. And I'm looking forward to making an absolute banger today. Finish up strong. Preparing the weekend. Drop some educational content for you guys. To then follow up with you guys on a Sunday again. To prepare for next week as well. So, immediately, guys. Immediately we are growing in a very, very rapid pace. Now I have to adjust. We have over 3,145 members in the Discord channel. Which is quite crazy when we reached the 3,000 yesterday in the stream live. We're still going to do the giveaway. We have done the giveaway. Sorry. Something that we're going to arrange after the stream. Looking forward to that. But man, there are going to be way more giveaways coming. I'm very, very looking forward to that for you guys as well. To just make sure that whenever we are growing right now, you know, the more people get funded over time and that we just constantly build up our team of, you know, funded traders, creating freedom, understanding the concepts right here, you know, creating new trading strategies, whatever we need to do to adapt and to stay always up to date in the market. So we have Adir in the building. He says, hey, Limitless fam. We have Sikozi. What's up? Says, morning you all. Gabi says, good morning. Lucky Sandy, my bro. Always good to see you, man. Bjorn, Luca, Pietro, Flavius, Landveld. I have to go a bit faster today. Hey there. Not Jared, my man. How are you, man? Nat85, brother. How are you? Bronson, how are you, brother? Loinvoy, bro. He says, never forget to travel to the Philippines. I will represent the Limitless Trading Academy in my country to help others. I mean, it's an amazing idea, my man. Pops Watzaki, bro. What's up, bro? Navid. Oh, my man. And Pesh. I'm not sure if I'm saying it correctly. Hope you're doing well, brother. Tanisha in the back. Oh, man. It's gonna be a great stream today. Good job. He says, how are you, man? I'm doing well, man. I'm doing good. We are building. Making sure that we are every day. Rory says, what was the giveaway? We gave away a $20,000 package of my Forex Funds. Absolutely fantastic. Hey, this is just the beginning, guys. This is just the beginning, okay? We're building something for the long term. As you guys know, we're building long-term value right here on this channel, okay? So the longer you stick to the channel, the better it's gonna be. You know, the more responsibility will come in your way. We're looking for team members. We're looking for people that want to give that input, that want to learn, but also want to teach, right? We're building out a platform completely. So, you know, tons of opportunities out there in this platform right here. And, you know, the bigger we grow, the more opportunities will be presented to us as well, okay? So what we're going to do today, we're going to do first some analysis today. We're going to go over the charts, of course, looking at the setup we're currently looking at. You know, different pairs that we want to trade today, potentially. You know, the different pairs that we had yesterday that played out, and so on and so on. We're going to go over that. We are going to talk about, you know, a little bit education as well. I wanted to bring some stuff in there as well to bring to the table. Then we're going to do the FOMC meeting, I think, and then we're going to do the interview. So yeah, it's going to be a long stream. Stick to it today. It's going to be very exciting. And I'm looking forward to that, okay? So very important, guys. Some updates from the chart from yesterday, from the stream. You guys know that we are still, if you follow the mentor charts as well in the Discord channel, we are still in GU right now at this particular moment. Literally got almost stopped out. It was like extremely close right here. We entered at 1.17748. Literally, look at where we came to. It was very, very close. We did not get stopped out whatsoever. But if you do, not really a big deal as well. Our stop loss on break even. We're not going to change our stop loss. This is not part of the deal. We actually know, especially when to change the stop loss to break even and when to keep it at break even, no matter what actually happens. Okay. Something else that I want to talk to you about was yesterday's stream. Unfortunately, personally, okay, I missed this opportunity. Happens to me sometimes as well. I just forgot to put an alert. I didn't want to place a limit order directly. Wanted to observe the chart. Wanted to wait for a currency indice confirmation. I wanted to look. I wanted to put an alert on. I did not put the alert. And of course, what happened here? We talked about this setup for a very, very long time yesterday's stream. We had a beautiful fair value gap there. We had the imbalance there. We had a beautiful 15-minute point of interest there as well. And everything aligns just perfectly right there. Look at all of that liquidity there down there. And the fair value gap there. And it was just a beautiful reason to potentially come back down from that area. Okay, so I missed out personally on it. I hope some of you guys got the trade. If you did, congratulations. Because it was actually a beautiful reaction from that area. Look at that. Look at that reaction right here. We're coming back up though. We're coming back up though a little bit though. I think we're preparing slowly for the news that's coming in around 1 hour, which we're gonna watch live together. But yeah, we definitely create some solid structures here. We entered here, we went all the way down. So there was a moment where we were literally at a beautiful. What is it? Yeah, pretty much a beautiful 6-to-1. Right there. Okay, unfortunate, can happen. Hope some of you guys actually got it. And yeah, I mean, that's why we have the stream, right? We're giving away setups and charts we're looking at. If you watch the stream on a continuous basis, you have seen many times that some of these actually played out. Some of them not, right? We're not magicians whatsoever. Stop losses get hit. However, look at this 6-to-1 opportunity. I mean, it's like a 6-to-1. That means that you can lose 5 trades after that to break even. So yeah, this was a beautiful opportunity. There will be way more opportunities out there. Definitely to take in consideration as well. We had the eurojpy we were looking at, never really came back down. In this case, same counts for the eurojpy. However, if you do come back down right now, it can still totally happen. We have built liquidity here. There are many reasons for it potentially to actually come back down, tapping into that area. You know, just a broader level of liquidity and a decent fair value gap there as well. So yeah, there are many reasons. We're keeping a close eye on a lot of charts as well. We're looking at gold as well. We're going to go over there in a second. And just in general, we are going to find like a massive amount of things playing out in the very near future. We look at this as well. We look at the US oil. We are seeing exactly what we thought would happen here. We saw that the liquidity was built here. Of course, we went through that, broke that trend there, took out some of that liquidity. We're looking at a potential entry. We're looking at a potential area of demand here. I see a beautiful order block here at the 70.562. So this is what I would like to see. And I think this is what we are looking for to enter right now or very soon. What we're going to do when the news is out, we're going to watch it live at the same time. Okay, we're keeping a small chart open for the DXY. As you guys know, if the DXY goes up, most of the time gold goes down, right? And there is an inverse correlation with, you know, the indices and so on and so on. So let's see what will happen. The DXY can also massively drop. I'm curious to what your personal expectation is. Please let me know in the chat. We can go over that in a second as well. So we had the core PCE price index coming out. This was the initial, you know, reason for the DXY. Right now, we had some good news. We had some bad news. But this is where it's all about. It's about Jerome Powell actually speaking live. This is what extremely, you know, high impact news as well. So this is something definitely that we're gonna watch and see what we can do. Absolutely fantastic. All right. So what are you guys doing right now? Let me know. Are you guys in any trades right now? Are you guys in any setups we need to review? You can post it in the Forex setups here in the Discord channel. If you do want to join the Discord channel, you're free to join whenever you feel like. You're welcome. Beautiful community out there. A lot of people are in the Discord streaming as well. So you can learn a lot from these guys. You can ask questions. yeah, there are many fun things to do here. Talk, chat, share setups, look at mentor charts as well. You know, learn, look at trade ideas, and actually try, you know, to create a bonding here, a family here, a group of people, like-minded individuals that want to learn, want to improve, want to make money, and at the same time, you know, look forward and, you know, follow their dreams. So we have RG Marcouche saying that he is in a UG short right now. UJ is interesting right now, indeed. Yeah, we can go over that one. Indeed, let's go over that one. Yeah, so we saw the reaction from the zone. I'm curious, please let me know if you entered a position, where you entered as well, because then I can kind of see exactly, you know, your vision, why you entered, what level you entered, and so on and so on. Okay. Would highly appreciate that. That would be great. Then we can actually see and review that. Okay. Personally, I see still some liquidity here. I see still a nice order block that has not been mitigated yet on the, I believe, 2 hourly right here. Oh, sorry, it's the 1 hourly right there. This is the area of supply we're looking at personally. And there is definitely some liquidity built up here. Keep that in mind. Early shortage in the market. You can see that liquidity is built whenever you see either equal highs or equal lows, or a typical, like, yeah, how do I say that? A typical like 15 degree downtrend or uptrend like that, like this, for example. That proves that there is definitely some liquidity there. There's definitely some imbalance above this range, still not completely filled, and an area of supply. Okay, so potentially, yeah, there's liquidity getting built on both sides right now. Look at that. We're forming kind of a pattern. So yeah, this pattern is definitely developed to be taken out whenever this is gonna happen. Okay, either up or down. Let's see what happens here. But yeah, 100% liquidity is gonna get taken. We just have to see on which side it's gonna be. If it's gonna be on the upside and we're gonna go up, then potentially I really like that, because then we can take out that liquidity, tap into an area of supply, reverse, boom, and take out the liquidity underneath that range. Okay? Could be great. Could be great. Hater says, Lorenzo, I like for the Limitless family. I agree, my man. Thank you so much. I appreciate that, bro. We're growing in a very rapid pace. And that's all because of you guys. Absolutely. So yeah, this is an interesting chart. This is a very interesting chart. I definitely take that in consideration. Absolutely. Is it good to close the orders before the news? That's a very good question. So if you are in a position right now where you are, you know, you see that you're actually close to your entry, then I would potentially put your stop loss and break even. That this is how I personally secure myself. Okay, it totally depends on what you want personally. If you say, okay, I don't really mind, I have my stop loss. If my stop loss gets triggered, I'm completely fine with that. Then sure, then this is completely fine, right? For you. I personally don't like to, you know, be taken out, or I just don't personally like to get my stop loss hit in a loss when you know, the news comes out, for example, and you know, just from that or a reaction. All right. So yeah, just this is personal preference, my man. This is personal preference. What are your thoughts on the Australian dollar against the Japanese yen? Oh, look at that. Look at that. Interesting. We smashed through this area. Okay. Let's clean it up a little bit. Some areas were invalidated. We have broken this high here. There is liquidity here. We have to go to the higher time frame for this one. Yeah, so liquidity here. This initial reaction was, of course, the right reaction, right? We created a nice structure. We came back up again. We tapped into that zone. But then we started just to accumulate upwards. right there. All right, we broke through that area. So now we should definitely look at higher targets here, which is in essence this area of supply here, above that area of liquidity. Little take it on eurjpy. Let's have a look at the eurjpy.
Dressed in a suit like Steve Harvey. It's really just me and my bros. People be hating, ain't throwing shade. Don't give them the time, say no names. Cause we bout our money, play no games. Stack up our bread like whole grains. Still indie like no name. Swag and splash, that's our old name. ISO, we in our own lane.
4-hour order block. We saw a clear rejection here. We are entering that zone one more time right now. We have not taken out the imbalance underneath that zone, but we have taken out the liquidity there. So yeah, that's quite interesting. We have another area here of supply as well on the lower time frame, so we can take this one in consideration as well. We can take this one right here. So yeah, still, unless we break out of this zone right here, we have still some downside potential personally. But again, we need to wait 1 hour exactly right now to see what the DXY will bring to us, based on you know, on the Jerome Powell speech. Right, we're gonna see what's gonna happen there. What I do find interesting is the Canadian dollar against the Swiss franc. This is something that I really look at right now, and something that we're looking for. Okay, this way of consolidating there is a lot of selling pressure as well. It's interesting. I think it looks, you know, it looks like we filled up the imbalance there. We mitigated into a 4-hour area of supply. Yeah, we mitigated into the 4-hour one. Came back up. So this is what we have done. We have filled that imbalance here. And we are starting to show some weakness right there. We're starting to really consolidate under that area. Specifically. So I personally believe that, yeah, if we break structure here, we can potentially look for a short there. When are you going to do a 24-hour stream? We're going to do a 24-hour stream. Oh my god, should I really do it? It's up to you guys. Do you guys want to see 24-hour stream when we reach the 10k subscribers? This is up to you. We can definitely take that in consideration. We are growing faster than I could ever imagine. So, that would be funny, man. That would be funny. Mixed opinions right here. Some of you guys say yes, some of you guys say no. All right, okay. Well, think about it, guys. We were thinking about it. I did say it before. Okay. So let's see. Let's see what will happen, all right? Also, guys, Ethereum, I don't know if you guys traded it yesterday. We talked about this one as well. And look, if you want to know if smart money concepts worked, this is from yesterday, right? We saw clearly the confirmation here. Okay, look at that. We had this area of supply. We saw the reaction from this area of supply here, right? I think it was the 2 hour. No, it was the 1 hour. It was the 1 hour here. 1 hour of supply. We came there, right? We tapped the market, that zone out. We saw that we on the 50-minute then broke structure to the downside. Where did that happen? Here. Right there. You see that? Actually changed character. Sorry. Changed character here. And we came back up. We tapped into that area right here. You see that area? Entry, stop loss right there. We had a soft stop loss. This was the idea that we shared. Using a soft stop loss. And beautiful break, beautiful downtrend. And what did we say? The 50% was the area where you wanted to look out for, right? This was what we discussed yesterday, the 50%. So what happened here on the 50%? The reaction. And what happened? Boom, broke structure to the upside. So it was actually the amazing trade. Look at that. This was a 9.721. Okay. Very, very crazy. So this is what we're doing in the stream. We're looking for setups there. It's up to you if you want to take them. Therefore, I really highly suggest to pay close attention to the stream whenever you look at the chart setups. You know, take a screenshot or write them for yourself or use it. Because it can definitely benefit you, right? Sometimes we get these really, really bangers in here. And sometimes I do personally not catch every single trade. Okay? So therefore, it's up to you. However, I give you all the trading ideas that you can leverage. This was one of them. The USD against the Swiss franc. Look at that, was one of them. We talked about this one for maybe 30 minutes, you know, because I liked it so much. Bit disappointed that I missed this one, that I forgot to put my alert, which I normally never forget. Well, yeah, this is what we're doing. And yeah, even for cryptocurrency, SMC works extremely, extremely well. It requires a little bit of a different stop loss approach. All right. We have Kantal saying, thank you, sir. Yesterday I made profit from Ethereum. Great, my man. Amazing. That's beautiful. That's I think Bitcoin is extremely, extremely similar. Let's have a look at Bitcoin. Well, we had like a trend here. We had an area here. Did we marked out an area? Let's see on 1 hourly. No, it's a completely different chart. Indeed, you're right. Completely different chart than what we saw with Ethereum. Ethereum was a beautiful, yeah, a beautiful opportunity right there. Absolutely. Premium of supply came back up all the way, built a ton of liquidity underneath that zone, tapped into an area, broke structure once we mitigated our premium area of supply, broke structure on the lower time frame, mitigated into the 15-minute supply, dropped and sold off from there. IA Media Group says made $700 on Ethereum. Congratulations, my man. Amazing news. This is what we're doing. Instead, do 3 hours into each session. I mean, I like this. I like this momentum here, guys. I like what I do here. 5-hour streams on average. However, yeah, let's see. Whatever we feel like, right? So far, it feels like we're just getting started. And it feels all extremely fresh. So we still have a lot of energy, a lot of excitement. And, you know, like I said in the interview, we are in a community-driven society. We have to make some sacrifices as well. So yeah, that was definitely a good opportunity. I'm very, very curious to what you guys are doing right now in charting in general, in working. So, are you guys right now working on something specific? If so, let me know. Working on a skill, working on your mindset, working on your strategy specifically. What are you working on? Let me know in the chat. We can go over it. We can talk about it. I think it's a beautiful moment to, you know, to definitely take that and approach that and take that in consideration, right? Would be great. Looking forward to that. I'm back. I have no idea for how long this was. What was the last thing you heard? What was the last thing you heard? That entire analyze, yeah? Okay. Alright. Okay, again. Scalping strategy for the stream. Yeah, I'm gonna make a complete video about it. Alright? But in essence, it's a combination of liquidity and imbalances on the lower time frame. Okay? And stop orders. Okay? Stop long, stop short. What we're gonna do. So I'm gonna make a separate video about it, explain exactly how the strategy works. And yeah, it's a one-to-one strategy. There's a one-to-one strategy. Yes, I know there's no FOMC. There's no FOMC, just a Jerome Powell speech. I have it in my title, I know. I know. We're gonna watch this together, guys. We're gonna watch this live. We are watching this live. I'm looking forward to that. Let's see what the reaction will be. We can learn from that as well. Okay, and in the meantime, you guys were talking about the things you guys were working on, okay? One of you guys asked a question about the volume profile. We can talk about that one. Working on finding better entries, says Christina. Okay. Trade management. This is interesting. This is very interesting. Indeed. Trade management. This is a great one. This is a great one. Trade management is a great one. Risk management, okay? Yeah. All right, let's start with risk management for a second, okay? The very, very important thing right now with risk management in general is just in general, okay? You have to decide for yourself what is the risk to reward you're looking for, okay? And why is that so important? Well, let's have a look at here. I think we can find an image for that. Where we're talking about risk to reward ratio. Okay, give me 1 second. Because this is indeed crucial for you guys to understand as well. Absolutely crucial. Okay. Win rate is extremely important to understand what the win rate is you're going after for. Okay. What are the trades what are your trades you're allowed to win? What are the trades you are allowed to lose? And how you can actually build your strategy based on that. All right, very, very important. There we go. This is exactly what I was looking for. Okay, perfect. So, this totally depends on your strategy, okay? What we are doing in this channel is most of the time we're focusing on price action, okay? We are price-driven like traders. These give us the best opportunities, all right? Especially when we saw a massive news outbreak. We do not trade the news. We trade the response of that news, right? What happened, for example, with the USD? What is the reason why we went into GU, for example? Well, that was because when this dramatically came out here, this was news coming out, right? We had some USD news coming out right there, which made the DXY come back down. All right? What happened? We saw that as an opportunity, okay? Our order block was formulated there. Our imbalance was there also at the same time, right? Beautifully. The moment we tapped into that zone, we built out liquidity on the upside here. So the opportunity presented itself to us, okay? This is what happened. So we tapped into that area and we took off from there, okay? So we are price action driven traders. We are aiming for roundabout, okay, 5-hour setup. This is what I'm personally doing. So it totally depends what you personally prefer or want to do. Some of you guys trade, you know, 1-to-1s. Some of you guys trade 3-to-1s, you know, and that is super important. So your strategy need to align with your potential win rate, okay, with your potential risk to reward as well. So what we have here is something you guys have maybe seen before. All right. Let's say you're trading 1-to-1, you're looking for 1-to-1 ratios, okay? And you do 10 trades in a row, okay? If you have a win rate of 20%, which is 2 out of 10 trades correctly, you are not profitable, right? You lose money. In order to become profitable, you need a win rate of around 60%. All right, you need to win more than you actually lose, always. This is why we trade one-on-ones, right? There are tons and tons of scalping strategies out there that give you a beautiful one-to-one setup. There are tons of other strategies out there, you know, stop order strategies and so on and so on, that provide you with these opportunities as well. A lot of different strategies out there where you can have a win rate of, you know, 60, 70, 80% possible, okay? This is a 1-to-1. 1-to-2 is the same thing, right? We have our 20%, not 30% not profitable, 40% we start to make money out there. So we can now, from the first time, lose more than we win and make money, okay? We can literally lose more than we win. We have 4 trades, you know, we place 10 trades. We only win 4 of them. We are profitable, right? Win rate of 40%. So this is how it works. 1-to-3, you know it, 1-to-4, and so on and so on. The reason why we are using this strategy personally and why I like it so much is because we are price action driven. That's number one. So the opportunities present ourselves, okay? The conclusion of the opportunities gave us, in most cases, a higher risk to reward. This is how we trade it. We trade smart money concepts. We have our hybrid version of it. We integrated volume profiles and some other tools as well. And therefore, we are aiming for minimum 5-hour setups. Out of my personal experience, my average risk to reward is a 1-to-7. Okay? Now, some of you guys say, yeah, but that's very, very hard to get. And it's true. It's true. That's why, you know, you have a win rate. You have an actual win rate, right? But let's stick to the 5-hour. Let's say we're aiming for a 5-hour, okay? To make it easy. That means that if we literally, you know, place 10 trades and we have only 2 trades correctly out of the 10 trades, we lose 8 trades in a row. 2 trades correctly, right? Using price action, using the inefficiency in the market, liquidity, currency indices, volume profiles, news releases, you know, reactions to that. You know, all of these stuff combined, a clear strategy, right? And we're still allowed to lose 8 out of 10 trades to break even? I mean, isn't that a great strategy? Isn't that amazing? Right? This is what we're doing. This is what we're looking for. Okay? This is why we're working on this specific strategy and why I like it so much. It allows you, you know, to lose without any worries, okay? It allows you to lose. Can you lose 10 trades in a row? Yeah. You can have an unprofitable month. I'm not saying you cannot, right? However, with the tools that we use, the probability that we use, I personally experienced a massive, you know, understanding of the strategy and a way easier state of mind the moment I personally understood this for myself, okay? So you really have to be clear for yourself. What is your win rate you're going for? Is your strategy actually adapting to that specific win rate? Does it make sense, yes or no? Is it aligning, right? In this case, SMC, what we are doing is aligning to our 5-to-1 risk to reward ratios, right? But that doesn't count for every simple strategy or, you know, a strategy out there. So you need to know what the average risk to reward of that specific strategy is. Based on that, you can come and you know, collect the data, build the volume, test out 10 trades, 20 trades, 30 trades, 40 trades, and you will know what your average win rate is over time. And this is gonna take some time. This is why you will not become a profitable trader, because you have to filter out things, you have to work on it, you have to tweak something, but not straight away, right? You need to do 10, 20, 30 trades, and then you tweak a little bit so you can exactly know what you're tweaking. You can then see a difference between the first results and the second layer of results, and so on and so on and so on. All right, so win rate, extremely important. Risk management is the most important thing in trading. Okay, we are talking about strategies, we're talking about our mindset, but risk management is the basic foundation of everything that you do in trading. Okay, that's why I love SMC the most. I can have a win rate of 20% and pretty much break even. Okay, this is beautiful. This is what we're looking for, and this is why we're trading, why we are trading, you know, these type of setups right there. So this is what we're doing. So make that decision for yourself. And I will share this also in the setup in Discord as well. So this is the basic foundation. Risk management is super important. Hope you guys are understanding that and see the power of it as well. It's gonna give you such a, you know, down to earth reaction, because now you know, okay, I'm allowed to lose this amount. I'm going for this amount of volume. I'll be very patient with the trades I take. I look for the highest probability trades possible, right? That are always similar in setup, okay? So if I now see a setup that's a 3-to-1, then I'm not taking it, okay? Purposefully. And why is that? Well, I wanna stick with the similar setups, so I can collect the data and I know everything is aligning perfectly with what I'm doing, okay? So things don't get confusing. That's why I know for a fact, this was my entry, this was my stop loss, this is my first target, and so on, right? There was already a minimum of 5-to-1 right there. I want to see how the market responds there, how everything reacts, you know? The second step is then, of course, trade management, all right? So this is indeed where we're gonna go talk about a little bit later. But yeah, I hope that made a lot of sense for you guys. And please, if you have any further questions, let me know in the Discord. Let me know on the chat right now. And yeah, we can literally go over every single piece right now for you guys today. Today's Friday. It's a very easy day. We're going to look at some trade opportunities. We're going to look at some setups. We are going to watch Jerome Powell today. And we have an interview with some of our team members. Absolutely amazing. Yeah, looking forward to that. There we go. Look at this trade, man. Wow. What would have been an amazing trade. What did we do, guys? What did we do? Look at that. We talked about this many times yesterday. We said it. We said this looks too clean. This looks just like it has to come down. It really wants to take out that liquidity. And look what we did. We came out. We stepped into that area of supply here on the 50 minute. We took out this liquidity, these equal highs here. We filled up the fair value gap, massively come back down to completely cover that liquidity. So unfortunately, I missed it. But yeah, I hope some of you guys took this trade because it was absolutely a gem right there. These are the opportunities we're like actually are looking for on a consistent basis right here. Absolutely fantastic. Hey man, how come you didn't take it? Personally, that was just a mistake by myself. I did not put in an alert. I wanted to not go in the limit order. I wanted to go in manually. I forgot to put an alert. And when I looked at it, it already hit this area of supply and it was here already. Unfortunately, yeah, that's just a stupid mistake from my side. Can happen. However, the fact that it played out gives me a great feeling. If I'm in the trade or I'm not in the trade, I feel good because I'm learning. I'm seeing things the right way. I see things in the way I wanted it to see. I wanted it to play out like that. So even when I missed this trade opportunity, which could have been, yeah, an insane trade. It was literally a 10 to 1. I lost out. I missed out on a 10 to 1. Okay, but I'm happy. I'm happy that I see that things played out in the way I wanted it to play out. So this gives me more fulfillment than the actual trade opportunity. These trade opportunities will come and go all the time. All the time. Why did you put it in the meta charts? I talked about it on the stream for like a really long time. A really long time. This also counts for the Ethereum trade as well. This also counts for the Ethereum trade as well. So sometimes it's important to watch the stream as well. Australian dollar, Canadian dollar, use 30. Nice call on the DXY pulling back yesterday. Yeah, the DXY responded exactly like we wanted it to respond at that time. This area of supply, definitely, right? We came back up, came back down further. So yeah, this area of supply was key. Tapped into that zone, sold off. So does supply and demand work for currency indices? Absolutely. Absolutely. Okay, let's have a look at the indices in general. The US 30 and the Nasdaq. All right, all right. Okay, okay. Interesting, lower low, came back up right now here. So this is the lower, this is the break here. Important break on the higher time frame. Swing high, swing low, 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 swing high, swing low. Change of character, internal change of character there. Break of structure there. So yeah, okay, break of structure here beautifully. Imbalance above this range? Yes. Are we coming back up or climbing back up? Yes. So what is the area we're looking for? This gap here, right? This is the area we're looking for. If that happens, let's say we come back up right now or the DXY drops further down and we come back up with the indice right here, right? What do we see here? What do we see, guys? What do we see on the 8-hour chart, guys? Exactly. Head and shoulders, right? So this is all potentially creating a head and shoulders. We don't look at it this way, but the way we look at it as is a break of structure. We saw the internal change of character here. We have the imbalance here. We have a beautiful area of supply here. We tap into that zone. If you take the high to the low, what happens? We're seeing exactly, guys, that we're entering the 70.5 FIB, the 79 FIB perfectly. So this is the area we're looking for. We're looking for this entry right there in the 70.5 and 79 FIB. Premium area of supply. Coming back down, filling up the imbalance completely, fulfilling the head and shoulders pattern to then sell off personally. This is my expectation. This is what we're looking for. It looks extremely well. It looks extremely good. More downside potential, absolutely, in my mind right here. We already saw the rejection on this area right there. We had the confirmation. We created a clear break of structure right now. So yeah, coming back up. This is the range we're looking for. It's around 13,450 to then potentially sell off further. Very, very beautiful setup, by the way. I really like that. I really liked it, and I would definitely trade that. I would definitely trade that. Why? Because we already had the actual resistance here. We came back down. We broke structure. We forming a nice head and shoulders, and yeah, it looks like a reversal. A beautiful market cycle playing out there perfectly. All right. So we have the internal chuck here on the lower time frame. Sorry, my bad. Wow, what I'm doing. So that's that. We have the US30. What do we see for the US30? It's a little bit of a different chart, right? A little bit of a different chart. Let's first look at the rejection here. Where did that rejection came from? What happened there? All right. Okay, these were the highs here. We saw this rejection from this horizontal level. Okay. Okay, we took out the liquidity. This was clear liquidity there. We took out the clear liquidity there. Beautifully. We came back down, but we're holding significantly this area of consolidation here. We marked out this area of consolidation. If you draw the volume profile here, what do we see? The point of control, right? We reacted from this point of control. We filled up the inefficiency here. So if you look at this one, and we look at the Nasdaq, which one would you look at? Which one would you prefer? Let me know, guys. Would you prefer this one? Would you? Oh, sorry, this is a chalk, by the way. Why is there a break of structure here? Internal chalk. Which one would you prefer? The US 100 or the US 30? The Nasdaq, right? Absolutely. We look at the Nasdaq. I really like the setup. I like the weakness here. I personally would take the Nasdaq too, indeed. So I'm gonna share the setup with you guys. Let me put it in the Discord as well. We're definitely looking at the Nasdaq here. What are we targeting? Let's have a look. We took off here. Yeah, this area of demand here is very interesting. There we go. 50%, this area of demand looks very interesting. Okay? So if you take our short position here, stop loss above that area, right? We would target this range right there. Stop loss above that high. There we go. Will give us a beautiful 6.5 to 1. Looking absolutely fantastic. Okay, the Nasdaq looks great. Let's have a look at the order blocks as well. Okay. I see, I see. Okay. Looking great, looking great. Looking fantastic. Okay, 2 hour order block. Let me share it for you guys as well. This is what we can look out for. If this happens live, we're gonna trade this. Because the confirmation looks absolutely fantastic. We have the S&P 500 as well. Let's look at the S&P 500 as well. Same thing. So the Nasdaq is definitely looking weaker than the other indices right now at this particular moment. Okay. In the meantime, we have a question from our man. Can you explain how to use the equilibrium, please, with the Fibonacci? Yeah, sure. We can definitely do that, man. We can definitely do that. We can definitely do that. So, it's what I've noticed, okay? There you go. What I've noticed was that we use the Fibonacci in 2 different ways. Okay, one way is of course for our entry. All right. The moment we saw our confirmation, right here, right? How did we spot the confirmation here? Well, the first thing that we saw is of course this rejection here, right? We saw that beautiful rejection from this area right there. This was a beautiful area we were looking at. We saw that rejection right there. Absolutely fantastic. After that, breaking structure completely, showing us a change of character here. Internal change of character, showing weakness, right? If you zoom out a little bit, we're seeing that this would align perfectly. So what do we do right now? Now we have potentially spotted the retracement, okay? The retracement of that level. So what we're seeing here is, of course, this is the high where we got the rejection from. This is the low after showing us a change of character. What did we do? We leveraged that, right? We took it from the swing high to swing low right there to determine what type of level our potential area of demand is. We have the equilibrium. Okay, the equilibrium is 50%. Why? There's an equal amount of, room above that level and under that level. It's right in the middle, right? In the middle, 50%. Okay, so we want to look for a potential short opportunity above the equilibrium. Okay, above the equilibrium. We want to sell it under the equilibrium. In this case, right? Looking for a short. You get it? So we enter above it, we sell under it. This is what we're looking for. That's why it's so effective. So what happens most of the time is we have certain levels. The higher it comes, the better it actually is, right? The more premium that area is in general. This is the 4-hour chart. Okay? Beautiful swing high, swing low. Confirmation. The 17.5 and the 79 is a very, very strong indication. A lot of traders are trading on these levels. All right. So can you use the Fibonacci only for that specific zone? No. No, it's not only using the Fibonacci. It's not going to be the way we trade. Okay, I know some people trade just on the Fibonacci, but we don't like to do that, right? We try to use it only as one confluence. This is only one particular confluence that we use for all of these other, things that we are using as well. So it's only one tool of reference, right? And that's the Fibonacci. We have, of course, this area of supply imbalances, liquidity, build yes or no the currency indices, break of structures, you know, a confirmation entry, and so on, and so on, and so on. News, many different layers, right? Fibonacci is only one particular confluence. So the 70.5 and the 79 is actually a beautiful area, a beautiful premium area of supply. Okay? You actually want to enter for a discount and sell for a premium. So enter for a discount, sell for a premium. All right? Then our take profit was in this case, why did we zoom out a little bit more? Well, we went to the 8 hour here. And what did we see here? This was the area of consolidation. This was the last low from this consolidation range. This was the swing high, right? So swing low, swing high right here. We draw the fib from the low to the high, and we're seeing that the 50% is most of the time a crucial level. In essence, it's a crucial level. If I would now put a horizontal level here, what do you see here? Well, what do we see? We're seeing automatically, look at that, perfect resistance here. Perfect, right? Support here. Resistance there. Again. Resistance here. You see that? Resistance here. And so on and so on. So does this area of the 50% fib from swing low to swing high now aligns with a beautiful area of demand? Yes, absolutely. Look. Beautiful area of demand right there as well. So we know that as well. We have a beautiful area of demand here. Okay. Now we had imbalances above this range as well. Right? We had liquidity built here as well. So all of these tools give me a beautiful indication that you can take out the liquidity, you can fill up the imbalance, touch that zone, and touch and mitigate the area which is the 50% fib from this level. That's why this is our profit target in this case. And therefore I really like to use it. I really like to use it. Absolutely. So the Nasdaq looking like a beautiful trade opportunity. What indicators do we use? We use the Fibonacci then, the volume profile, the fixed range volume profile. Sometimes we use a divergence indicator, an RSI divergence. Can you show your strategy for scalping on the lower time frames? I need a full video for that. I'm gonna make a full video for that, specifically for scalping. EJ is potential short. Yeah, we have been climbing significantly indeed. But I do think that we can go higher. Why? Because of this liquidity built up here. Liquidity is built up here. Stop losses are right there. We have an interesting zone here, massive drop off, sell off from this range. We have some inefficiency there, so overall I would say we can potentially come up higher. So I would not look for an area somewhere in this range right here to go short at personally. Yeah, so the Australian dollar, Japanese yen looks better. Because we're now taking out some liquidity here, right? We're taking out some liquidity there. We're filling up the gaps here. Right there, above that area. So yeah, I like that more. potentially. So this is a nice range. This is a beautiful order block. This is a nice structure. This is what we like to see. So yeah, I like this one definitely more. I think there is a lot of imbalance, a lot of some liquidity above that area, under that area of supply. But I do like this one. I do like this one. This is definitely something that we can take into consideration, yeah. There we go. Like I said yesterday, we're looking for the Canadian dollar short as well. This is what we wanted to see. Oh, this is great. This is beautiful. This is fantastic. As clean as it gets. Okay, we filled up the imbalance here. We tapped into that area. We have our beautiful point of control aligning perfectly with a beautiful order block as well. On the 1 hourly here. Let's see on the 2 hourly. 3 hourly. 4 hourly. Okay, it's a 1 hour order block here beautifully. So yeah, this is a great reaction from it. Even better would be, guys, if we break these lows right now. Imagine breaking these lows right now, coming back up. Okay, so breaking these lows, tapping up in this area, and then come back down. This will be fantastic. What are we targeting? Of course, this liquidity underneath that zone, this area of this area of consolidation right there on the 4 hourly. This is, I believe, or is it a 2 hour order block? This is a 2 hour order block here, right there. 2 hour order block here. So yeah, liquidity, order block, fair value gap. Yeah, looks amazing. Looks great. I think that this is going to be our trade for today for sure. Let's see what happens here. But yeah, looks amazing. Looks absolutely fantastic. May says consolidation, expansion, retracement. Exactly. This is what we are seeing. Also funny that we're now filling up the imbalance here, right? For the US dollar and Swiss franc. What a massive trade this would have been. There we go. So yeah, this looks nice. This looks great. This looks great. If you have a nice thick sell-off right here, creating a lower low, then retrace. Oh man, beautifully. That's the dream setup right there. All right. Confirmation once again, right? We saw the rejection on this level. Yes, we had liquidity built up, but we saw the rejection here. We then created a significant lower low on the higher time frame as well. Nice chuck on the higher time frame, and then come back up, tapping into our 1 hour order block beautifully, mitigating our point of control. Sell off from there. Targeting areas of liquidity, targeting equal lows, targeting some imbalances, targeting a massive gap underneath that area. What I missed opportunity for the... No. The opportunity is yet to come. Coming later, so I have to deal with this right now. So what I said was at the 1 hourly, you could see clearly that for 4 hourly that we had a lot of trend line liquidity built up here. So it was not really a missed opportunity because of that specific reason. The fact that we could easily break through that zone to tap out, create higher highs here, and to take out some liquidity there. But now we got the confirmation. So yeah, this is great. This is beautiful. These are beautiful setups we are looking for. The complete structure break here would be the sweet spot. If you can break this level, retrace, step into an area to then come back up, come back down. That would be absolutely fantastic. Looking forward to Federal Mr. Powell. Yeah, I really want to trade this. I really want to trade this one. This is a beautiful trade setup. Wow, look at the EURUSD, guys. Massively reacting right now. That means that our GU trade is gonna crush it. Okay, we're getting there. We are getting there. We are still in our position from 2 days ago. Longer than usual, but yeah, we are still in. So let's see here. This is our first target. We're definitely going to take some profits. We're going to see what will happen with the DXY. Alright. But the Canadian dollar Swiss franc will be potentially our next trade. There we go. Australian dollar, Canadian dollar looks nice for potential sells. Okay. This is definitely one of them. EURUSD is pumping very hard right now, so we are waiting for that. We were actually had a long position there, right? However, it was not mitigated. It was not mitigated. We did not fill up the gap completely, which is interesting. I would have loved to see that. We took out some liquidity though, but yeah, not the imbalance there. So yeah, that's okay. That's fine. So that pair is crushing it. This one is invalidated. Then we have Ethereum coming back up. Yeah, the US oil, interesting. US oil looking good. US oil is looking nice. Something we can take into consideration as well. The eurjpy, not really. GJ. Okay, we talked about GJ yesterday as well. This was a big opportunity. We're looking out for GJ right now, and this is what I would like to see. So I believe we have a lot of liquidity here. We have lovely liquidity have built up there. Tremendous amount of liquidity. Honestly, guys, I truly believe that we just have a lot of liquidity there. So what we want to see right now is something exactly like this. Okay? Let me look at the 2 hourly. Oh man, this is beautiful. What do we see? We're seeing an order block. Right there. Beautiful order block right here. We saw this area of consolidation here. Also, Kai, same thing. Consolidation. We use this tool, which we call the fixed range volume profile. It's right in the middle. It fits in line perfectly with the 2 hour order block right there. In the neckline of the order block. So in the neckline of that order. Of that market neutral candle. So a retracement for the Canadian dollar, Swiss franc, GJ right now, sorry. Coming back into that zone is also a great opportunity to take out all that liquidity that we have been looking out for a really significant amount of time, okay? I truly believe that. And I like what I see. I like the fact that it's consolidating like that we're creating the structures here. And something big is gonna come for GJ. I said it yesterday. I said also yesterday I did not sell the opportunity. So today, potentially right now, we're seeing on the lower time frame, something brewing, something happening right here. Okay? Which I love to see here. So GJ, Canadian dollar, Swiss franc. Definitely something we're looking out for. So these are the two. Canadian dollar, Swiss franc, amazing. Price action right there. Okay, in 10 minutes, guys, we're gonna watch Jerome Powell. Looking forward to that. Australian or Canadian dollar? Did we look at that one already? I don't think so, right? Yeah, wow. This was yesterday's chart. It's a bit messy. But yeah, we had a lot of information on this chart right here. So it was consolidating here, right? We said, okay, it's going to break that zone, which it did. I personally believe we're going to reach that area, tap into this area here, the point of control there. All right. Tap into that point of control to then potentially retrace, come back down. Okay, this is this was my suggestion. I expect that price to come back one more time here to take out the liquidity that was built here. We tap into that zone to fill up this inefficiency there. So this. Accumulating liquidity, inefficiency, tapping into this range, then coming back up, then coming back down, right? Something like that. But we went up right now, and I think that potentially this is the area we can do, yeah, we can look out for. However, yeah, we keep a close eye on this one. Because this is the retracement of this area, of this breakout right there. All right? So, yeah. This is what we're looking for. So, great. This is great. Equal lows, yeah, correct. Equal lows there as well. Equal lows there as well. Equal lows here as well. A lot of downside potential for Australian dollar, Canadian dollar, in my opinion. So yeah, that's why we're looking at this range here. I had some bad weeks in trading, and last 2 weeks I killed it again, but didn't even trust myself enough, so eventually I closed winners today. Winners way too early. Did you ever have to deal with this? Just a question. Yeah, absolutely, brother. 100%. We had to deal with this. Many times, brother. The thing is though, that you need volume, okay? You just need volume. You need, again, like we discussed in the stream already earlier, right? Pick your risk to reward ratio. Fits, look for a strategy that fits that risk to reward ratio. Try out a lot of different trades and collect your win rate, right? This is what you want to see. So predict your win rate. See if it plays out. See if you can work your way up within that range, right? Can higher the probability. After a lot of trades, you will get the data. You will see pattern recognition. You will see things in the chart that you said, you know, the last time I closed it here, I had this and this, I should have kept it open and blah, blah, right? So my first answer to your question will be 100% I experienced it. I solved it by volume, by a lot of different trades. And secondly, there are some tricks, some rules you can use for yourself to determine when to exit, when to stay in a trade. Okay? So yeah, I'm gonna release an ebook. I'm gonna drop everything in that ebook. It's coming very soon. And this will be part of that. Some trade management will be definitely important. But it's very important that you stick to your potential risk to reward ratio. Sometimes yes, you are forced to to close your position earlier than you wanted to. But that doesn't happen that often. That doesn't happen that often. When you identify a level, should we set the limit order, or should we look for the lower time frame chunk and then enter a trade? So sometimes I go in aggressively. I'm making a video about this actually very soon. Aggressive entries versus confirmation entries and the difference in that. For aggressive entries, we're looking at more confluences. So what I mean with that is higher time frame areas of supply. So like premium areas of supply on the higher time frame. Let's say let's just assume, right? In the long term, we come all the way up into the zone. This is a massive range, right? From here, we are in a fractal market, right? So we have charts and charts, patterns and patterns. We have swing high to swing lows on higher time frames as well, right? On lower time frames, higher time frames, and so on. So if we are entering now, let's say this is the swing high to swing low, and we're coming back down here, tapping all the way into this area of demand, supply here, filling up this massive gap. Look at that massive gap. Then, of course, on the higher time frame, we are in a massive premium area of supply. We filled up the imbalance. We had liquidity built up, let's say. Right, these are extreme, like high probability confluences you can use so you can enter aggressively. You can then look for the re-entry in confirmation trades. If you are not sure, so we were not in this case, right? Why was that? Well, in this case, we saw that we had liquidity built up above this area of supply. You see that? Above this area of supply, we had liquidity built up. We had a beautiful trend. All the stop losses are here right now. So I didn't want to enter aggressively here, right? We could easily just, accumulate and break out to take that liquidity. That's why in this case, I wanted to see confirmation. And so it totally depends on the trade setup, on what we are looking for. But most of the time, the basic fundamentals have to do with the higher time frames and to see if you are in a premium area of supply or demand on the higher time frame. And that gives you more confidence for your trade. Okay? That's why on the lower time frame, I'm talking about the 4 hour, 1 hour, 30 minute, and so on and so on. Sometimes we wait for confirmation entries. And then the confirmation entries will most of the time play out on the 30 minute, 50 minute, 10 minute, 5 minute, and so on. Speech is coming out very, very soon. We will know. We will get notified. I'm looking forward to that as well. Hi Lorenzo, when you say high time, do you mean the 4 hour and daily? Do you consider the 1 hour as... I consider the daily, the 8 hour as the higher time frames. The 4 hour, 1 hour, and 30 minute as the mid time frame, and then the lower time frames under the 30 minutes. So this is why pretty much how I look at how I determine premium areas. Right, we have internal structures as well. So yeah, it totally depends where are we at in a higher zone. So we're not always there. These opportunities are less presented to us because we have to wait a little bit longer for the higher structures to play out, right? To come up into areas we're looking for. So that's why sometimes we have to look for more confirmation trades as well. However, there is one specific reason for me that always will go aggressively, and that is this. For example, what we're seeing here is in the mentor charts we saw for EJ, we didn't went there right now, but we saw something very, very nice. We saw that there was liquidity built up Aaron, imbalance, that liquidity is number 1. Imbalance is number 2. Beautiful order block. Higher structure. Liquidity on the top side. You know, many different, confluences came together there as well. So I will definitely be a little bit more clear for you guys as well when to enter aggressively, when to look for confirmation entries, and what are the confluences and structures you need to look out for. So thank you for your question. I will definitely now you told me this, I will definitely work and definitely work and do something about that and make sure that that's super clear. It's gonna get wild, guys. It's gonna get wild. Okay, we are live.
And serves as the bedrock of our economy. Without price stability, the economy does not work for anyone. In particular, without price stability, we will not achieve a sustained period of strong labor market conditions that benefit all. The burdens of high inflation fall heaviest on those who are least able to bear them. Restoring price stability will take some time and requires using our tools.
Be careful with any positions right now.
To bring demand and supply into better balance. Reducing inflation is likely to require a sustained period of below-trend growth. Moreover, there will very likely be some softening of labor market conditions. While higher interest rates, slower growth, and softer labor market conditions will bring down inflation, they will also bring some pain to households and businesses. These are the unfortunate costs of reducing inflation. But a failure to restore price stability would mean far greater pain. The U.S. economy is clearly slowing from the historically high growth rates of 2021, which reflected the reopening of the economy following the pandemic recession.
Dollar is coming up.
In my view, our economy continues to show strong underlying momentum. The labor market is particularly strong, but it is clearly out of balance, with demand for workers substantially exceeding the supply of available workers.
If the DXY is coming up, gold should come down.
Inflation is running well above 2%, and high inflation has continued to spread through the economy. While the lower inflation readings for July are certainly welcome, a single month's improvement falls far short of what the committee will need
Look
to
at
see
gold.
before we are confident that inflation is moving down. So, we are moving our policy stance purposefully to a level that will be sufficiently restrictive to return inflation to 2%. At our most recent meeting in July, the FOMC raised the target range for the federal funds rate to 2.25% to 2.5%, which is in the summary of economic projections range of estimates of where the federal funds rate is projected to settle in the longer run. In current circumstances, with inflation running far above 2% and the labor market extremely tight, estimates of longer run neutral are not a place to pause or stop. July's increase in the target range was the second 75 basis point increase in as many meetings, and I said then that another unusually large increase could be appropriate at our next meeting. We are now about halfway through the intermeeting period. Our decision at the September meeting will depend on the totality of the incoming data and the evolving outlook. At some point, as the stance of monetary policy tightens further, it likely will become appropriate to slow the pace of increases. Restoring price stability will likely require maintaining
Nasdaq dropping
stance for some time.
Nasdaq dropping hard.
The record cautions strongly against prematurely losing.
Look at that, taking a lot of liquidity there.
Committee participants' most recent individual
Was built up here.
June SEP showed the median federal funds rate running slightly
Beautiful.
below 4% through the end of 2023. Participants will update their projections at the September meeting.
DXY coming up.
Our monetary policy deliberations
DXY coming up.
build on what we've learned.
Let's keep a close eye on the DXY right now.
Both from the high and volatile inflation of the 1970s and 1980s, and from the low and stable inflation of the last quarter century. And in particular, we're drawing on three important.
Are you holding GU on break even? Yes.
The first lesson is that central banks can and should take responsibility for delivering low and stable inflation. It may seem strange now that central bankers and others once needed convincing on these two fronts. But as former Chairman Ben Bernanke has shown, both propositions were widely questioned during the Great Inflation period. Today, we regard these questions as settled. our responsibility to deliver price stability is unconditional. It is true that the current high inflation is a global phenomenon, and that many economies around the world face inflation as high or higher than seen here in the United States. It's also true, in my view, that the current high inflation in the United States is the product of strong demand and constrained supply, and that the Fed's tools work principally on aggregate demand. None of this diminishes the Federal Reserve's responsibility to carry out our assigned tasks.
The more aggressive, the better it is. The better we can respond, and more trade opportunities will present themselves for us later.
We are committed to doing that job. The second lesson is that the public's expectations about future inflation can play an important role in setting the path of inflation over time. Today, by many measures, longer-term inflation expectations appear to remain well anchored. That is broadly true of surveys of households, businesses and forecasters, and of market-based measures as well. But that is not grounds for complacency, with inflation having run well above our goal for some time. If the public expects that inflation will remain low and stable over time, then, absent major shocks, it likely will. Unfortunately, the same is true of expectations of high and volatile inflation. During the 1970s, as inflation climbed, the anticipation of high inflation became entrenched in the economic decision-making of businesses and households. The more inflation rose, the more people came to expect it to remain high, and they built that belief into wage and price decisions. As former Chairman Paul Volcker put it at the height of the Great Inflation in 1979, inflation feeds in part on itself, so part of the job of returning to a more stable and more productive economy must be to break the grip of inflationary expectations. One useful insight into how actual inflation may affect expectations about its future path is based in the concept of rational inattention. When inflation is persistently high, households and businesses must pay close attention and incorporate inflation into their economic decisions. When inflation is low and stable, they are freer to focus their attention elsewhere. Former Chairman Alan Greenspan put it this way: for all practical purposes, price stability means that expected changes in the average price level are small enough and gradual enough that they do not materially enter business and household financial decisions. Of course, inflation has just about everyone's attention right now, which highlights a particular risk today. The longer the current bout of high inflation continues, the greater the chance that expectations of inflation will become entrenched. And that brings me to the third lesson, which is that we must keep at it until the job is done. History shows that the employment costs of bringing down inflation are likely to increase with delay, as high inflation becomes more entrenched in wage and price setting. The successful Volcker disinflation of the early 1980s followed multiple failed attempts to lower inflation over the previous 15 years. A lengthy period of very restrictive monetary policy was ultimately needed to stem high inflation and to start the process of getting inflation down to the low and stable levels that were the norm until the spring of last year.
This is great for us. We want to see this.
Our aim is to avoid that by acting with resolve now. So,
this is good. This is good. Completely fine.
Guiding us as we use our tools.
Nice opportunity there. Nice trade opportunity there.
We're taking forceful and rapid steps to moderate demand so that it comes into better alignment with supply and to keep inflation expectations anchored. We will keep at it until we're confident the job is done. Thank you.
Okay, now it comes. Now it comes. The speech is not even that crazy, that wild, okay?
Thank you, Chairman Powell. Our first session of the day is reassessing economic constraints, maximum employment. We will hear first from Nicola Fuchs.
Oh, really? I thought we had the interview as well. I thought we had the questions as well. Oh, we didn't have the questions today. Okay. All right.
So good.
Okay. All right, guys. Let's see what happened here. Let's have a look at what happened. Let's do some research real quick before we go to the next phase. All right. I'm very, very interested in what actually happened. It was not crazy. Nothing spectacular, to be honest. I expected a little bit more volatility than what I've seen here. So for me, this is nothing spectacular whatsoever. I wanted to see more, you know, volatility so we could potentially react to that afterwards, okay? However, this is great for us. If the Canadian dollar, Swiss franc comes back down right now, beautifully, we want to see this then getting broken, retracing, amazing opportunity there. As clean as it can get personally, so I really like it. So this is great. I think it's very disappointed speech. I think for a lot of people, they were expecting way more. So the reaction in general is doable. Is nothing crazy, nothing spectacular right here. So oh, it did. Let's have a look at GU right now. Yeah, perfect. Okay. So GU almost reached my first target. Okay. Which is great. That means from this area right here, we can start looking. We can take a little bit of profits here. I want to close 50% of my position here. And see what happens. After that, potentially, I close my full position still. But yeah, this is a beautiful 5-1. So let's see right here. Let's see right here. Keep a close eye on this one. Yeah, I'm actually very interesting what happened here. I expected a massive shock here. I expected interviews as well. This was a... Yeah, this was nothing special. This was really nothing special for us whatsoever. The volatility was nothing crazy. We see some pairs coming up right now. So we have GU almost reaching our target, which is great. Canadian dollar, the more it comes down to then retrace, the better it is for us. Okay? The better it is for us. We have a massive gap here already. We want to see this candle closing as low as possible so we can confirm this area right here as a massive gap. Okay, we're talking about a big one right here. You have this level to this one right here. This is the fair value gap we're talking about. So if we then come back up to fill up that gap, to tap into our zone, point of interest right here, the point of control, which is this area right here, then yeah, this is absolutely fantastic. So then we can then start looking for lower targets right here. We saw also that the Nasdaq reacted pretty heavily to this all. So let's have a look, see what happened there. So this was pure liquidation hunt, obviously, right? A lot of stop losses were under this area, built up here, beautiful trend. Stop losses were right here, massively taken out, bought up right now, and you know, moving forward from there. Okay. So yeah, this is potentially still our opportunity we're looking for. And I think that this is interesting. This is interesting. So okay, we have the US 100. We have Australian dollar, Canadian dollar reaching a point of interest indeed. It's coming there. It's definitely coming there. So very close as well. This is coming close. This is coming reasonably close right here. This could be interesting. Let's have a look at this. Let's clean it up a little bit. All right, let's clean it up a little bit. We have this area right here. We had this zone right there. We had the area of supply. Okay. Interesting. So we're going to look for an entry here on a 5-minute or 15-minute OB. We have, in the meantime, we look at Swiss franc. Canadian dollar, Swiss franc. I really like what I see here. These are the sweet spot trades here. The sellers were really looking for. A beautiful area of consolidation under a premium area of supply, a rejection, and then a massive gap, massive fair value gap above that, under that area of consolidation. The lower we go, the more confident I will get about this trade opportunity as well. Just so you guys know. Right now, we are building some liquidity here if you do tend to come back up right now. So these are all good signs, beautiful things I want to see here. This is a nice area of demand we have to take into consideration, but still, this whole area of consolidation is gonna also be extremely important. But we still have a decent amount of space there. All right, so yeah, definitely look at this opportunity right here. Absolutely. Okay, check Swiss franc against Japanese yen. Yeah, so this is a trade setup that I personally want to be a little bit careful about, especially if you retrace right now with if you go short for the Canadian dollar Swiss franc. We're looking for short there as well. I see this as a super clear area of demand. This is on the daily, right? So this is a clear daily area of demand right here. The point is that we came back down here. We broke structure to the downside, right? A change of character there. But then immediately we broke it on the upside as well. So we invalidated this level. So yeah, let's see what we can do here on the lower time frame. If you zoom in a little bit more, then I'm not convinced personally with what I see here on the lower time frame. If you zoom out on the higher time frame, I think that there is still way too much room there to be full on the lower time frames. You know, a lot of people can get induced indeed to go into this here short right now, to enter this short right here. And yeah, there is an area of imbalance right above that range, right? There is a gap right above that area. There's liquidity right above that area. So yeah, it is for me, even though it could work, but for me the probability is not worth it. The probability is not worth it personally. Shikoshi said, so do they know everything, like when the market will go up or down? If yes, they shouldn't be the richest. They shouldn't be the richest people alive? 100%, my man. 100%, bro. Absolutely. A lot of manipulation is happening. A lot of manipulation is happening behind the scenes. But hey, manipulation is opportunity, right? Massive liquidity hunts is opportunity for us. It leaves us with the imbalance. It leaves us with the inefficiency in the market, the fair value gap in the market, right? Opportunities for us. We can adjust and use this in our favor. So yeah, please, more manipulation, please. No, I like this entry. I see the consolidation, I see the rejection on the higher time frame. I see the consolidation on the 1 hourly. I saw the break of structure here. I see the you know, a beautiful bearish pattern here. A beautiful, thick, big 1 hour fair value gap. Beautiful area of supply. Liquidity built up here. So yeah, it looks very nice. In this trade, I would personally go in aggressively. Yeah. Yeah, it makes sense from a higher time frame to lower time frame standpoint. The way we rejected there, the reaction that we saw there eventually, the liquidity that was built there right now, the imbalance that's there. I mean, we have to wait we have to wait and see what the imbalance will be, right? Because right now this candle has to close first. If this candle is not closed, then we cannot say that this is an area of fair value gap yet. But the moment this candle closes like that, then this is a nice area of inefficiency there. We saw that in the retracement, and I do like what I see there. The best case, like the highest probability, would have been if we are breaking structure here as well. However, what we're seeing is liquidity built up underneath this range here. So I do like that too. Let's have a look at the NAS. If somebody tells us that the liquidity has been swept out, yeah? Jared, my man? Sure. In a few minutes, we're going to talk with our man. Our guy. Yeah. Our big brother. We need to see how we can call him. But we call him James. He's in our voice chat. He's absolutely fantastic. We're gonna interview him. We're gonna ask him some questions, and I'm very yeah. He has been helping the community out tremendously over the last couple of weeks without even asking, right? He was just somebody that joined, just like any one of us in the community. And then from this moment, he just started to drop bombs in the member voice chat, you know, giving serious, you know, taking the time for everyone asking questions every single day. So yeah, he deserves absolutely all the respect in the world. And then on the next party as well, we really are curious to who he actually is, what his journey is, where he came from, how he entered, you know, all the trading related questions. We're gonna ask him to get to know him a little bit better. And yeah, that's how we should do it. Absolutely, looking forward to that. So let's one more time look at all the opportunities right now, and then we can continue with this as well. Yeah, it's amazing teamwork. I can do the YouTube here, and then James is in the Discord. It's amazing, absolutely fantastic. Yeah. In the end, we want to help you guys out. You know, becoming better traders, learning, developing, and feeling part of a community. And you know, with people like that, then yeah, definitely helps us out a lot. So yeah, the Nasdaq, what happened here? Yeah, just some liquidity sweep here, nothing crazy. We came back up. We got a lot of people induced to go long here, right? A lot of people got induced to go long here. We broke structure here. People had stop orders there, you know, to the upside potentially, and then we just immediately reversed, broke structure to the downside. So yeah, this is a typical reaction that we see many times whenever news comes out. This is why a lot of people get wrecked also when they potentially trade news, because they see Jerome Powell speaking and they suddenly see the Nasdaq massively pumping. They think, wow, okay, go long quick, and then they reverse price. So yeah, this is why I personally, and this is also like again it's also probability, right? It's also a thing. Some people love this. I personally like the opportunities that come after, you know, the volatility, because sometimes there is so much imbalance that needs to be filled or tends to get filled that I really like to leverage that and to use that. So the trades that are confirmed is the Canadian dollar against the Swiss franc, in my opinion. This is the trade that I really like here, that we can look at. Okay, I think it's clear, guys. Let's have a little look in the community right now, and let's see if you can actually come into the voice chat real quick.
look at it's the titles start with 2022. So
Okay,
if you just
yeah,
want to kind of, if you want to do that, then that's amazing. And then we have we have some other stuff, but yeah.
Okay. All right. Now, because I was just curious, and just out of curiosity, what does his mentorship go for? What does he charge
You mean when it was open?
when it was open? Correct. Just so I can have a ballpark idea, just a number.
What was that number? I want to say like 1,000 a month.
What
Oh,
the
wow.
fuck?
Yeah.
Oh, okay.
Ah,
All right. No,
here's
just
why- That is
Yeah,
curious
fucking
about that.
fucking
But
22.
that's
Holy
that's
shit.
me like me theorizing. So don't hold me to it. But he if you go back to some of his old stuff, he tells you what the price would be. So I remember there's
Best community ever, guys. If you do want to join our Discord, please join our Discord channel. We talk about the charts. We talk about whatever you want to know. Everything trading related. You can ask any type of questions as well. So our Discord is built to help you out, to look at trading ideas, to look at setups that you potentially wanted to see. So it can save you a lot of research while you're working on your strategy, while you can build up friendships over here, and we can talk, and we literally have, a lot of amazing people in there. So, absolutely fantastic. Let's give him some time real quick.
Okay. So that's what I think the target it's gonna be. It's not over yet.
okay.
I just lost my trade
Remember,
on
that's a
T-Pay.
daily.
Okay, we're gonna start this as soon. They're still a little bit. They're chilling a little bit. The money talks is why are we discussing UG, UC, GU? We are in GU right now, bro. Already. UC that we just looked at UC, I believe. I think that did you look at UC? I'm not sure anymore. Maybe you're right. Maybe you're right. Let's have a look at UC indeed. No, I think we are. I think we are in. Yeah. Breaking out massively. I don't see an opportunity here. I see a massive expansion. Massive expansion. That means that the DXY is going up. That's interesting. So we have this area. We have this important zone here that we want to see taken out. That's the liquidity right there. So no, I do not see a direct potential entry right now on the USD card. And then we had UG. Yeah, so for UG we talked about this one. We wanted to see the liquidity getting taken out somewhere. And what happened was, wow. If you guys want to know how liquidity works, guys, then this is the exact opportunity that we're talking about. Look at this. We started to compress into this zone. The reason why we were compressing was we were building purposefully liquidity out on both sides. On this side and on this side. Right? What happened? Man, oh man, oh man. It's so crazy sometimes, but it's so logical as well at the same time, right? What happened? We came back down massively. Okay? We took out the liquidity here in a very, very rapid pace. All the stop losses were here, taken. Then, the people that were short, they took out all the liquidity there instantly as well. So from here, boom, liquidity taken. Move price back up, boom, take the liquidity. And then make the actual move. So we just built a pretty significant liquidity on both sides right now. We have taken that out. And now we are tapping into this area of supply here. And yeah, now we can look for the lower time frame indeed. For this one. For some confirmation entries here. With this volatility, I would always be a little bit careful. But yeah, you see how it works? It's absolutely incredible. Absolutely incredible. Market is stop loss hunting right now. Yes, because the reason why, every single time when there is a news release coming out, that's like high impact news or marked as high impact news, we see that liquidity is built up beforehand, purposefully, on multiple different charts, multiple different, you know, levels. And, you know, they're cashing out. They're cashing out right now, right? So this is what they're doing. They're cashing out, and we have to wait until they're done. And then we take, you know, we put a bucket, you know, we put a little bucket under their money tree, and we wait and we see. So we have closed 50% of our GU position as well. GJ is still an opportunity I'm looking out for. Okay, so GJ is one of them, and the Canadian dollar against the Swiss franc is the second possibility there. Which platform do we use? I use personally IC markets. IC markets. I think the currency index DXY is coming back up. Yeah. There we go. Reflection, my man. Thank you for the sub. Welcome to the community out there. Welcome, my man. Absolutely amazing that you are here. Fantastic. Looking forward to have you here. Okay, this is great, guys. This is what I want to see. I want to see this lower low getting taken out. That means that this candle closure will be definitely under this area right here. So that means that this fair value gap is absolutely legit. So if we then come back up to fill up the imbalance, then we can potentially look for a beautiful, beautiful short opportunity. And I really, really like what I see here. Massive trade opportunity, guys. Really. Because we are targeting decent levels down. We have a target along the way, but it's a significant level we are targeting. Absolutely. We are targeting this area right here. So this is an 11-to-1 trade setup, okay? Keep that in mind. 11-to-1 trade setup. Beautiful structure here. We are taking that in consideration, absolutely. Can we keep this trade over the weekend? Yeah, let's first see. Secondly, you need to ask if it's possible. If you are funded, if you are a funded trader, you need to be careful. You need to always verify this with your prop firm. If you work with your own capital, like I do, or private investors, then there are no requirements, right? However, I do tend to make sure that my stop loss is secure whenever the market closes. Pito, Lorenzo, could it also not go to the supply above that? Which one do you mean, man? Which area of supply, bro? You mean this premium area of supply? Is this the one you mean? Because we saw the rejection here. We had a massive rejection from this area here. We had this rejection. We're looking for the confirmation now. What did we see here? We saw the consolidation there. So we target that area here. We targeted that zone. We saw the confluence. We saw the consolidation. This is the expansion. Right now we're breaking these lows here. We're tending to break these lows here, which is beautiful. Because now we have a massive gap here. Beautiful area of consolidation. We have the expansion creating a lower low here to then retrace, tap into that zone, fill up the inefficiency to then mitigate price back down. And if you zoom out, you will see a nice head and shoulders pattern as well. That a lot of people trade. That a lot of people will trade here. Boom. Confirmation here. Okay, confirmation right now. Internal chalk. Higher time frame chalk. Fantastic. A massive inefficiency is always great. Always good. In every circumstances. Why is that? Look at that gap on the 2 hourly. We talked about the 1 hourly here, but look at the 2 hourly here. That's absolutely incredible. That means that this means that the Canadian dollar, Swiss franc right now, that the DXY is responding very hard right now. It should be. Okay. John Rogers says, want to see it flag back up, tap into that area and drop. Yeah, I agree completely. Absolutely. Yeah, if you're talking about this pair, yeah. We took out some liquidity here now. We broke structure on the low on the higher time frame. A significant 1 hour chalk right here. 2 hour inefficiency on the 2 hour is immense. Any retracement is absolutely fantastic right now. To tap into that zone to come back down further. So yeah, 100% beautiful trade setup right there. I really like what I see there. So let me share it with you guys real quick in the Discord. Guys, if you want to know more about, you know, change of character or market structure, then I highly recommend you to use lines as well. As lines sometimes can give you a very good indication as well. All right, just so you know. It has helped me personally tremendously with picking out the right structures and so on. The other indicator is also Sonar Lab. This is actually an indicator that we use as well for that. But yeah. So retracement, tap into that area, and point of control as well. Would you enter aggressively on USD cut? No. No. Do you need a premium trading view to use Sonar Lab? No. No, you need to pay for this indicator. AJ is reacting good. Yeah, we can talk about Sonar Lab as well. I'm actually I partnered up with Sonar Lab because I personally like the indicator. I'm using it myself. I'm not actively promoting it whatsoever because I personally believe that you need to know the basic fundamentals of supply and demand yourself. But if you do have a good understanding, then it's one of the best indicators out there that can help you with confirming, confirming areas, spot certain zones, internal structures, especially market structure. So yeah. Okay, what I see here is a clear liquidity build here. Liquidity equal highs there built up. Fair value gap above that area and a massive, beautiful area of supply. So we still have a room to grow up, in my opinion, to take out some liquidity there, fill up some inefficiency there, to then potentially look for an opportunity on, the lower time frames from this range. Even though we're reacting right now, I see it. I see it indeed. This is a nice level here. But yeah, just in general. We're looking for... we're always zooming out a little bit at the beginning to then narrow down. So yeah, if you want to look on the... you can look at it. This is, for example, Sonar Lab here. Look at Sonar Lab. This is without Sonar Lab. This is with Sonar Lab. It clearly shows all the internal structures, swing high, swing low, the fair value gaps as well on every level, an area of supply beautifully. It marks out the perfect order block here, which is correct, very, very clear, very accurate. And yeah, it works very, very smooth. It's just pretty much smart money concepts without having to do it yourself. However, that's not the right mentality, right? So if you know smart money concept, you have an understanding of supply and demand, then this is definitely amazing to use sometimes. I use it definitely when I'm not streaming a lot to just look at it automatically. But because I'm streaming, I'm not showing it a lot because I want to explain everything, every single thing, myself to you guys, of course, and not just only use this indicator. But I can 100% say it's very, very good. So if you want to use it, then you can use because we're partnered up with them. The link in the description, my man. Yeah, GJ is definitely something we're looking at. Okay. Okay, lower time for confirmation. Yeah, we know our order block here. We know our point of control here. We're gonna see reaction from this zone. Lower time frame confirmation. The only aggressive move I would personally make is Canadian dollar Swiss franc. This is what looks, this is textbook for me. So do not put I do not recommend to put any orders right now in GJ. How much time do you typically spend on the charts per day? Yeah, with you guys a lot. Without you guys, without the streams, the 4 or 5 hour streams, I excluded that. Let's say I would not be streaming. 2 hours a day, one and a half. Maybe 90 minutes a day. Yeah, it's great for the DX right that comes back up right now. We can tap into this area of supply. We're gonna see reaction from the zone, absolutely. We're gonna come up. We're coming back down as well. And yeah. It's definitely gonna happen. iFulux market 24 hour. I don't know, man. I don't know, bro. Do you trade all pairs? Yeah, because we're trading smart money concepts, we're looking at more pairs. Yeah, because we have to, because we're looking at specific opportunities in the market. High reward opportunities. Oh shit, GU coming down. Of course, the XY is coming back up. I did not see that. Our stop loss stays the same. We have taken 50% profits. Our stop loss stays the same. Took out a lot of liquidity. US dollar, Swiss franc right here. We took out a lot of liquidity here. You see it, guys. You see it literally right now. These are the moments before a massive news release. They build up liquidity. They build up liquidity so they can take it out. So if we can spot the liquidity, we can kind of find a direction if we find a correlation on a lot of different pairs where the liquidity is built. So knowing how to spot liquidity is extremely, extremely important, because you see clearly right here, look at that. Look how aggressive. And the wicks here are all stop losses, hit. We're getting, you know, sold directly. So massive, massive reaction to that. Absolutely. Massive drop in the Nasdaq, yeah. If you want to be part of the Discord channel, guys, then feel free to be part of the Discord channel. We have all our charts in here. On the stream, we also mention a lot of charts right there. When we look at setups, we're replacing all the setups in there. For example, we have our GU setup. We had it, our EU setup right there. We had all our setups in there announced also beforehand. I think this was our GU setup as well before we managed to catch this trade. So if you want to be part of that, then join the community. You can definitely learn a lot from that. Yes. Shout out to your voice chat moderator. Yeah, he's a G. We're gonna interview him right now, while we look at the charts as well at the same time. Yeah, absolutely. He's a great guy. I'm gonna be also more active in the Discord as well. But because we're doing the 5-hour live streams on YouTube, it's sometimes hard to be also in the Discord at the same time. So yeah, it's amazing that we have some support there. That's absolutely fantastic. eurjpy, yeah, let's have a look at that one indeed. Yeah. Thank you, brother. That's very, very good. Thank you so much, bro. Took out the liquidity, tapped into that zone. Imbalance is there. We wait for lower time frame, 5 minutes. 5 minutes, yeah. Many layouts. I see you guys dropping many different charts in there that are potentially ready. You guys want to trade, but let's make sure we are, you know, picking the right ones. All right, let's make sure that we are picking the right trade opportunities. Not be too impulsive right now. Okay, let's make sure that we are really looking at the right setups. That makes just in general make the most sense. All right. Love says your live streams adds more value to the Discord community. Yes, absolutely, my man. Yeah, that's why I love the balance between James and me right now at this particular moment, where he helps a lot of people in the Discord, so I can help people in on YouTube as well, and you know, build out the community, and while making the education and everything as well. Okay, guys, we're gonna start right now. I'm very excited to that. Very looking forward to this opportunity. To have a conversation with our man, with our brother. Oh man, it's gonna be fantastic. Gonna prepare a little bit, going into the Discord right now, and let's have a conversation. There we go. Thank you guys for the patience right there.
Just smooth play. At least twice a week.
All right, we are live. There we go.
All right, my friend. How are you?
I'm doing very well, my man. I'm very excited. Really excited to. I was looking out to this moment the whole week to have a conversation with you, and yeah, to really go and dive a little bit deeper, because you have been absolutely an amazing asset for the community. You jumped into the charts or into the Discord like everyone else, and you just started to drop bombs in the Discord community, in the voice chat. People started to ask questions. You kept coming back, and here we are together having a conversation.
Oh man, it's amazing. It's a great opportunity. Hopefully, I can live up to the billing.
Oh man, more than enough, man. So yeah, just to begin in general, man, James. Your name is James, correct?
Yep. Well, my first name, that's my middle name. There we go.
All right.
So yeah, well, name's in CCAC.
Okay.
But my middle name is James. My middle name is James. So
absolutely amazing.
I always give people the option, whichever is the easiest for whoever's addressing me.
Yeah. Everyone in the chat is already is ready for you, man, and super grateful for your efforts. So yeah,
I appreciate that.
We are all extremely curious to, you know, your history, you know, trading related as a trader. From what age, like in general, how did you first started, and what personally, you know, attracted you first to trading in general? How did you start it out?
So I mean, I guess you could say like so as a kid, um I've always been attracted to numbers. I used to like before we ever had computers. So that's how just to give people perspective how old I am. Uh like when I was really, really young, I used to at the end of the night before I go to sleep, we have the nightly news. So they used to the stock market information
Yep.
at the end of the night before TV would turn off or the station would turn off or the news would turn off. So my parents found that I always would just be waiting for that before I wouldn't go to sleep until I watched that. So I guess for some reason in me and numbers we kind of connected a little bit. So they saw that, and so my dad just over time continued to feed that in the summertime by
Mm,
allowing me to read some of his college level books
right.
because he had a minor in economics. So all his economic books will be around, and he will have us. Uh, we have to read a chapter a week and then do a report and on the information in the book. So that's how I kind of got familiar with terms and numbers.
From a very, very, very young age. Okay. And did your father supported you in that as well? Both of your parents were happily
Yeah,
supporting you?
yeah. My parents let me like the so yeah, for the most part, yeah, my parents early on they allowed me to go and do my thing. They taught me how to research
Okay.
information. So that's what a lot they encouraged me to go to the library because then at that point in time their interest wasn't necessarily investment.
Yep.
So they encouraged me and said, hey, we see that you this is something that you like.
Right.
It's something to as children we become distracted by the smallest things. So it was one of the things that held my attention for long stretches of time.
Right. Right. Wow. Yeah, that's incredible. That's incredible. So your both of your parents did not had a history or some history in economics or something like that. So it just came out of your own like personal interest as a child.
I think we lost him for a hot second.
Can you hear me, James?
But I want to say to everybody, welcome to the voice chat. It's a pleasure to have so many people in the chat.
Oh, the voice chat. The
It
voice chat
definitely
is
is a pleasure.
for some reason the voice chat is muted. So I need to figure it out where that came from.
Oh yeah, Lorenzo, you're
You
muted.
have been server muted, I think.
Uh, oh, sorry, Lorenzo. I'm sorry.
No problem, bro. No problem, bro. You're the voice chat moderator. So you decide.
Oh,
You
yeah.
decide. If you do
No, man. I didn't know. I was trying to mute somebody else. I didn't know I was muting you. My
No,
apologies.
absolutely. No problem, no problem. No, my question was, so your parents did not had an actual history in terms of, macroeconomics or something like that. It just came from your own interest as a child. You were watching the TV from a very young age, and this was your first like epiphany moment already that gave you these insights.
Yeah. My dad had a minor in econ. So and his master's was in business administration. So
Okay.
he could direct me in terms of terminology and understanding macro information and how it affects the world.
Yeah.
So that's one of the things. So it was so he kind of planted that seed, and then over time, I knew that he always said that the world was vast and that there's plenty of information all the way until you hit the grave. So he said, it's good that you're interested in this. It's something that will be very helpful to you.
Yeah.
He already kind of understood that, and so he fed it in the beginning. So there's always new information at the time coming out, and so from a stock perspective, he would give me various things to look at from a not micro but macro perspective and how it affected various companies' balance sheets.
Yeah.
So that's how I kind of had a better understanding how markets move.
All right.
The beginning.
So the moment you were actually then growing up, you kept pursuing, or was it more of an in and out? Sometimes there was an interest and then you lost it for a couple of years and then it came back again, or was it just like, straight focusing on?
I can't say that I've never they've never my in and out was probably due to athletics.
Okay.
Like playing basketball a lot. So that's probably more of when my interest will wane, because I'd be focused on something else that would have my full attention.
Yeah.
And because I kind of have a competitive drive, that would have attention in the near term. But over to I still would get, like, my dad would always in the beginning, we had there's never a month or a day that we didn't have like the Wall Street Journal. So we always I always still would read the Wall Street Journal. And then as I got older, I started reading the Investor Business Daily because it had charts. So as I was going through my transition to becoming a better technical a person that could analyze charts from a technical perspective, that become extremely important.
All right.
That, and also Barron's.
So from the moment you grew up, you started to get better and deeper. What was actually the first moment you decided you wanted to actually be active in the financial markets yourself? So like we had macroeconomics and everything around that, right? All the knowledge that you've gathered along the years and everything like that. But what was the first moment you said, okay, now I'm ready, or I'm ready to do something actively in these markets?
I remember when I was 19, and so the me saying that and it actually being true, being ready, it's two different things. You don't know what you don't know.
Yeah.
So at the time, at 19, if everybody on the voice chat and in the stream can remember and even some of the 19-year-olds possibly that are watching now, you have that feeling like you know everything, and you seem to think that you're always going to be right.
Yeah.
And so that was probably the first time that I thought about, oh man, I want to I'm going to participate in the market. So at the time you had to, because I was I'm a teenager at the time, so I had to get a sign off from my parents. So my mom had to sign off on it.
So you had a part-time job or a job, and you were saving some money, and then you were using this to already invest into the financial markets.
Yeah.
Okay. And did you start it out as a trader, or did you start it out as an investor, or where was your niche?
So at the time, you couldn't really, I guess you could say a little bit of both.
Okay.
Because in a bit, the first time you could start looking at charts is like I was around the university I went to. It was one of the first universities to have Wi-Fi throughout the whole university. So not all, like everybody now that goes to college, you kind of take for granted that you have Wi-Fi, right?
Yeah.
but wasn't always like that. So I would come from the era when it wasn't always like that. So my university, I think is one of two, University of Minnesota and Ohio State were like the first two universities to have like Wi-Fi.
So he didn't have an iPad?
No, that wasn't even. I don't even. I'm not sure. Yeah, Apple was still. You still had the big monitors and everything.
Yeah,
you had floppy to do your work.
So,
and I know some know about the floppy.
No, that's fantastic. That's fantastic. So, like your journey as a trader, right? Let's start from the beginning. So you started out trading. Different types of markets. You started out also investing as well. Did you eventually move more towards the trading side rather than the investing side, or did you work your way up? How did that look like?
Okay, so yes, I eventually worked my way up, but the thing that really like piqued my interest, like really changed the game for me, was I read in a report about options. This is the first time I've ever heard the term reference. It's probably when I was right around when I was 18.
Yeah.
So before I got my first trading account, I saw there's a little pamphlet I wrote off to. There's a gentleman. His name is Lawrence G. McMillan.
Yeah.
So Lawrence G. McMillan, for everybody that's in the stream and voice chat, they refer to him as the godfather of options trading. So being able to learn it, hedging, hedging positions. So he had he produced the options encyclopedia. If you want to, I think it may be in one of the books, one of the many books that he sold over the years.
Yeah.
So that really piqued my interest because I saw leverage, and for the first time, I could see like where you could take leverage and really generate huge returns. So that's what really like took kind of my interest to a whole nother level. Like there's a whole nother world inside this world.
Right.
So that forced me to kind of like start building out not only my understanding of macro,
Yeah,
but start preparing to move over to technical analysis.
And I can definitely understand that, especially then back in the days, I assume that fundamental analysis was definitely more popular at the time than actual technical analysis, right?
Absolutely.
Yeah.
It was a thing.
Yeah.
So you really had to, and it was a thing that every newspaper, newsletter from maybe a banking institution, it was about, it would have all types of fundamentals information in it.
Right. Right. Yeah, so you really had to dive deep into the books, into the... Wow, interesting. That's so interesting. So, along your trading journey, can you tell us a little bit how your trading journey developed over time and where you went from there?
Yeah, so probably like from, I think I've said it in the voice chat because somebody asked me previously. It's like from 98 to 2008. I was probably a pure fundamentals, very, very little technical.
Yeah.
And then in 2008, I wanted to really get better. I was introduced to volume spread analysis. That was my first foray into getting better as a technical trader, and it took quite a while, and took a lot of dedication. A good strong, I would say, 3 years. Of really doing a lot of it, and like no days off really, and so I can understand, because once I got opened up to volume spread analysis, I had a teacher, and so my teacher exposed me to Wyckoff. And so once I understood that VSA was kind of based on the Wyckoff methodology, it really allowed me to see technical trading from a different perspective. It opened up the other half of the world. It's like I would equate it to living in the US pretty much all your life, and then as an older adult, you leave the United States for the first time to go to Europe. Or to London, or go to Paris.
And
you're like, whoa, this is all here, all this architecture, all the various cultures are here. People interact with you differently. There's different type of lingo. So that's what happened when I went from fundamentals to going to VSA. I would say VSA/Y.
Wow.
Because I was learning both simultaneously. So that's probably why it took so long, is that there's some details within the BSA framework that, well, I should say there's some details in the Wyckoff framework that are not necessarily all present in the VSA framework. So I was just marrying the two things and finding a good equilibrium between the two spaces.
Yeah. So was it that you eventually, like a completely new world opened, as I assume right there, right? Was it that you then try to fit how you could combine fundamental analysis with technical analysis, or that you saw more benefit in one of the other?
So, and that's also another reason that that it took so long. It's because of how steeped I was in fundamental analysis.
Yeah.
So it's kind of like fundamental analysis is its own whole. Technical analysis is its own whole.
Yeah.
So to be able to climb into the technical analysis hole, you have to climb out of the fundamentals hole.
Yeah.
You see what I'm, and so that you can let yourself down into the technical analysis hole.
Yeah.
So there's things that are not applicable in technical analysis that you would hold on to in fundamentals.
Yeah. Yeah. Exactly.
Yeah.
So, like what made you pretty much the trader then that you are today? Because right now you have been trading for a significant amount of time already. You have gone through many cycles as well in the economy, right?
Yeah.
So you have a lot of experience, a lot of understanding of macroeconomics right now. So if you would say right now, what is a little bit of your balance right now between the technical analysis and fundamental analysis right now on this day?
90-10.
Fundamental?
No.
Technical. Okay.
Yeah. Yeah, okay. 90-10. 90% technical, 10% fundamental.
Okay.
And the 10% just is wrapped around news events.
Yeah.
That push markets in various directions.
Yeah. And why is that?
You said why is that for me personally, or just what my opinion is?
Yeah, sorry, my mic fell away. No, why is it that you completely transitioned from fundamental analysis to technical analysis after a significant amount of time?
So because I wanted to become, I was driven to be, I knew that I wanted to become a person that could really do a great job of projecting out price.
Right.
So I knew that in order for that to happen, I really had to really drill down into the Wyckoff from volume spread analysis perspective.
Yeah.
And so during that time frame, what that allowed for me to do was to see, like in anything, even like with Wyckoff and how I combine Wyckoff with SMC or ICT model, whichever one you wish to use.
Sure.
But what it allowed for me to do was drill down and find causality. So what creates this? Why is this moving from point A to point B?
Yeah.
And so as you dig down and you get more familiar with the technical side of your journey and you marry yourself to it, I like to use that word. It implies a lot of dedication.
Yeah.
Marriage is dedication to something greater than yourself. So that's how I look at technical analysis. It's a body of work that's greater than me. Yeah. And so in order for me to really get into a good relationship with technical analysis, I had to marry myself to it.
Yeah. Yeah. You made a very, very good point there. Especially what I really liked is that dedication part. So it is absolutely a must-have, and I feel that for a lot of traders in general, it can be extremely overwhelming, right? All that information that we share, that you share also, on the Discord channels, all these charts, all these patterns, right? All these structures in there, the SMC strategy in general. What could be a really, really good start for somebody that's new to technical analysis? What could be an easy way to reflect and step by step, grow themselves or grow an account or from the beginning? What do you think is the potential best best way to start out?
I think you have to starting out. You need to shift your paradigm from
Our man James, I think there's something with the internet. Let's be patient for him.
My apologies, everybody. I think something happened here locally. Can everybody hear me?
Absolutely. Yeah.
Oh, okay. So I think like in the immediate for somebody that is in the beginning stages of technical analysis or trading,
Mm-hmm.
the thing is that you have to understand the principles that you're building that you're executing your trades on. So there, in all honesty, I think the worst thing you can do to tell somebody is that it's easy.
Yeah.
Because if it was easy, their failure rate wouldn't be 9 out of 10.
Yeah.
So it's not easy. Just like telling somebody that becoming a surgeon is easy, or becoming a practicing doctor is easy, or becoming a person in the legal profession wherever you are in the world is easy.
Yeah.
No, you know the type of effort you put forth to get your diploma
Yeah.
or degree to be able to practice. So the same thing is true here. This is no different than anything else. Is that there has to be a level of respect for the information, one, and
Yeah.
then two, you have to gauge where you are mentally
Yeah.
in order to take on the information. So it needs a tremendous amount of patience
Right.
with yourself, not with the information yourself. And then it's the other piece to this is that you will be isolated in terms of the learning aspect of it. So you have to be a self-starter.
Mm.
So these are like a couple of the principles that you have to practice, and these are the tools that you're going to grab to every time that you have an opportunity to study the information.
Yeah.
So yeah, that's what I would tell somebody,
Yeah.
that hey, you have to be a person that's willing to be honest with yourself.
Yeah.
And then the second piece to that is you have to be a person who's willing to be patient with yourself, because it takes being patient to take in the information and allow yourself to process it, because we all have various backgrounds that we come from. So the learning curve, that's what creates the difference in learning curve for everybody is a lot of times our environment dictates that. So example is, if I'm a father of, let's say, 3, I'm not going to have that much free time to take on the information consistently.
Mm-hmm.
If but so you have to there's a level of negotiation that has to go on with whoever you are potentially married with or involved with, that hey, I need about 2 hours a day minimum,
Yeah.
and I'll do this and this. So that's why I say you have to be patient with the process, and you have to build in accountability. So that's why you have to have a set time that you go and study, that you go and look at the charts, and that has to be something that you practice daily. There can be no, oh, I don't feel like it today. No, the day that you don't feel like it is the day. It's like anything, like every great football player or soccer player, every great basketball player. The professionals, they have days. I'm telling you, they have a lot of days they don't feel like going to do the work.
Mm-hmm.
But the thing that they do have is the discipline.
Yeah.
So the discipline has to override the emotional makeup of who you are.
Mm.
That's the one commonality that all successful people have: self-discipline.
Absolutely. Absolutely. We always preach as well that there is a big difference between being motivated and being actually disciplined, right? So
Yes. Yes.
motivation that comes and it goes, and that, you know, it's very hard to stay motivated for a very, very, very long time. But being disciplined, this is what eventually is going to take things to the next level. But same as going to the gym, if you do not feel like going to the gym and you still go to the gym, then in the end, even though it was not maybe the best possible exercise, you still went, you still force yourself, and that will, you know, you're reprogramming your mind to for the better. So
Yes.
yeah, absolutely,
Yes.
absolutely fantastic. So I know for a fact that there are a lot of people in this community specifically that are having a, you know, working as a, no, they have a full-time job as well, right? So they have a full-time job and they have the family. So like you said, you have to indeed have a, there should be an open room for discussion to indeed, you know, see how much time you can make free for a potential, you know, to work on the side notes, you know, on trading. But do you think it is possible to have, you know, a full-time job and to still, you know, learn the skills that you need to learn? Is there an easy, or is there a certain way that we can leverage how we can, you know, go from this or transition from this full-time job into trading?
Yes, there is. And it's kind of understanding, like, what I used to do a while back for sometimes for people is kind of change when I was, if somebody's asked me to coach them.
Yeah.
So what we do, we just say, hey, let's sit down and let's talk about let's have a conversation about how your average day looks. Because, you know, a lot of times people will tell you, if they are, especially when it comes to, if you're coaching them in trading, they say, oh man, I don't have that much time. I don't have that much time. So I I I can't say yes, or yes you do, or no you don't. We just have to have a conversation, and let's write it out. So I'm a big advocate of time management.
Right.
So one of the things that my mom and my dad sent me to was a Franklin Covey camp. For at the camp I had, you know, at this camp there were CEOs, there were students. This is when Franklin Covey, you know, they had intermingled people. They just wanted people to learn how to use the Franklin Planner properly. So I always start there. Let's look at how much time you're spending. And so I've yet to find a person that cannot give themselves an hour and a half. But because what we do is what I would do is I would sit down and I would say, hey, let's look at, do you have a planner? 7 times out of 10, they don't have a planner. I said, okay, so let's go and get a planner. We'll go and get the planner. We come back, we sit down, and we start saying, okay, what time do you wake up? Write it out. Well, what time do you go? Do you go to work? What's your work schedule like? Hey, write it out. What do you do after work? What do you do just before you go to sleep?
Right.
So in that, you become much more structured. And I would say 90% of the time, people see is I don't have to tell them.
Yeah.
Once they write it out, they see. So now in the gaps, you fill in the gaps with what you want to happen. That's how accountability works.
Yeah.
Day to day. You hold yourself accountable because you see it being written out on paper for you to see. So that's the accountability framework that you build in for yourself, and you let I'm not telling people they have to go and buy Franklin Covey. I don't make money off of Franklin Covey, but I think that they are the #1 time management tool in the world. If it's good enough for CEOs globally, it doesn't matter the country. Why is it good enough for you? So understanding, even, and I'm not saying you have to go and get the Franklin Covey. You can just go and get you a $15 planner or $10 planner. But understand that the reason you understand the purpose for why you're buying that is to manage your time.
Yeah.
And to make sure that I have time to address, even if when you're first learning, you can start taking your notes inside your planner.
Yeah.
So whenever you have time at lunch at work, you're looking in your planner and you're reviewing your notes. You'll be amazed at how much the subconscious mind can pick up just through reading and repetition.
Yeah. Very, very, very interesting, especially the fact that what we're seeing a lot is also when people have a very organized and structured life, you can see that it almost reflects in the charts as well, right? Into the charts at the same time. So the charts that you're looking at are in essence a representation of yourself, of how your life is structured in general, how you treat the market. So it's very, very, very related. So are there any other, techniques or, mindset techniques that people can actually, use right now to improve? Because the main problem that we're seeing in the Discord as well is of course the fear of missing out. This is one of the number one the number one asset that people are struggling with. Then we have, of course, also the fear when entering a trade. So, closing a position too early, these type of things. Are there any tricks or, techniques that you like to implement before you start trading that can help you out with, solving these type of issues?
Yeah, there is. So I'll give you a little insight on how, like, every one of my days, even today before we came into here and started dialoguing. My day kind of starts off pretty much the same. I will go ahead and make my bulletproof, and from the bulletproof, I have my notes. And I say this in the voice chat all the time. Like, we really hammer this day to day to day to day to day.
Yeah.
Without religiously, is that you have to have fear is born out of not knowing, not understanding what you're doing. So the way that you conquer fear is through repetition, understanding what you're looking at when you look at the charts. So this is why I always say, like, recently this week, I was saying to the voice chat, I say the reason that even though I have all this experience, I still go and I have about 15 pages, I think, yes, 15 pages of notes. And I read the notes back and front. 7 times is my number. And the reason that I have these notes, they're just, you know how you highlight things? I'm highlighting things for my brain to hang a hat on before I look at the chart. I'm also giving my brain an opportunity to relax, to understand it's the equivalent to when you're an athlete. You don't just go out there to start playing, with all effort. No, you stretch first. You indicate to your body that you're about to start doing some type of heavy movement or intense movement. So the same thing is true for your brain. So you have to you have to talk to the brain. You have to tell the brain that, okay, we're about to look at charts. So we have to get our mindset correct. So that's why we read our notes. So first thing you would do is you have good notes. Make sure you take notes because your notes are going to be personal to you. You know what activates certain things that you need to highlight in your brain, and things that you lose sight of when you're looking at the chart. So those are the things you put in your notes. So when we read the notes that not many times, we also are communicating to both our conscious mind and our subconscious mind that we have to turn down the noise. Anything that we heard before is inconsequential. That's why we're doing it repetitively, because with each time we go through it, what it allows us to do, it gives us the capacity to be able to focus our energy, to focus our mind. So it's a twofold attack when you're reading your notes over and over. What it allows for you to do is quiet your mind first of all, and then focus your mind on the task at hand. So the notes will be, you'll have a set of notes for bullish setups and market direction, and then you're going to have a set of notes for bearish direction. Now, the reason that we read all the notes, those notes at the same time, because we want to come to the charts with a balanced approach, a balanced mind. So we're indicating to our brain, or our subconscious and conscious mind, that we don't have a bias yet. We don't have a bias because we haven't looked at anything yet. But what we do want to do is be aware of what we should be looking at in the beginning. So how we start is how we finish. So if you don't know what you're supposed to be looking at, then it's gonna be like the proverbial child being separated from the parents in the mall. You have a whole bunch of people moving back and forth around you, but you don't have context. So what this allows you to do is come with no bias, and that you're open to building out your context from the higher time frame so that you can execute on the lower time frame. Does it make sense? I hope, to everybody.
This absolutely makes a lot of sense. What I picked up in your message there is also something I personally experienced many times in my trading career, and that is, I can kind of call it a autopilot, right? So sometimes when you are trading, when you start coming and you have, you see an opportunity out there, you directly want to go for it, and you start trading on autopilot. So you're not like consciously there. And I think a lot of people probably align with that as well. And this is also the moment where you make a lot of like unnecessary mistakes, and you think like, man, why did I do that? Why did I just do that? I know that I should not do that. Like, I know all the rules, but I still did it. Why was that? And that's the autopilot. I think the advice that you just gave of writing down these notes, making sure that everything is aligned and balanced, so you know exactly the moment when you enter or when you're looking for any positions, that you are there consciously, actively, and you're ready, to approach the market, and you can take full responsibility, like that.
Yeah, I want to add just one additional thing to the statement, is that for people that may not understand what I'm saying, think about it from this perspective. I want everybody to kind of close your eyes for a second and just listen to what I'm going to say to you. Think of you sitting at a wheel, and you're sharpening a knife, because you need to be able to go out and hunt so you can eat. But the only way you can hunt is that you have a sharp knife. The notes that you read are you sharpening your knife. Just think about it. You don't go on hunters don't go out to hunt with a dull knife. The knife has to be sharp so each strike is precise. The same thing in trading. Each movement has to be precise so the execution allows for you to be able to take money out of the market.
I'm still sharpening my knife right now, my man.
Hey, man, hey, do it. Take your time. Yeah, it's definitely good. And the other thing is that always starts from a macro view of the market. You never, rule number one for anybody that's new, where you do your analysis is not where you execute your trade.
Right.
I'm going to repeat that for you. If you do your analysis on the 15-minute chart, you don't execute your trade from the 15-minute chart because it's the larger time frame. You need to drop down to a lower time frame and execute from that time frame. So we always do macro analysis first, so we have context. We need to know context. So it's 4 hour, 6 hour, 8 hour chart. So we know what we're looking at for the day.
Yeah.
And then we drop down to these lower time frames like 30-minute, 15-minute chart. So you don't make a mistake and get caught in the wrong leg, because a lot of people in the voice chat that I've seen and spoken to, we're still getting a handle on making sure that we execute on the correct leg that lines up with our macro analysis. So we don't go into profit for a little bit and then the trade turns against us. So always understand the same time frame that you don't execute trades on the same time frame that you're doing your macro, not micro analysis, macro, your bigger time frame analysis.
That's absolutely fantastic. Yeah.
Yeah, and I know that for newbies, because new people always want to. We've all been been new to trading, and the first thing we want to do, we want to put a trade on. We want to put a trade on, and then we don't want to do the detail work. See, the love for trading is built in understanding how the intricate details connect to one another, so that it allows for a clear understanding and eliminating the fear of executing your trade.
Mm-hmm. So is there one thing specifically you would before we go into some shorter questions as well, is there one thing specifically that you can recommend a retail trader right now spending the next month? So something that can master for the next month, they can work on that. What would you advise them?
Study accumulation and distribution.
Accumulation and distribution.
Because they're two different sides of the beginning of your understanding. They're the baseline for moves. So accumulation, as we all know, is where demand is built for a move, for a bullish move, and distribution is where supply is located for a move down. So those are the baselines for bearish and bullish movements. So master those two areas.
Absolutely. I think that's great advice. I think we should go over that a lot in general also when we're doing the streams. I think this is indeed a very, very important topic. Thank you for that, James. We have some quick questions also in the chat. So please, if you have any questions for James, then please let me know in the chat as well. You can ask him anything you would like. If you are not in the Discord channel yet, if you are, if you want to join our Discord channel, then feel free to join our Discord channel. Our link is in the description. So while we're waiting for these questions, I have some short quick fires for you as well, if you don't mind.
Yeah, let's go. All
right, what is your favorite entry setup?
I only have one, and I don't have a favorite. They just and that one is what we always talk about in the voice chat. So it's basically change of character from either direction.
Okay. All right. And what strategy do you use to exit or manage your trades? Because this is, of course, extremely important as well.
So I use the ICT methodology that talks about after change of character, where I know by looking at the chart where liquidity is at. My biggest thing is understanding where your daily highs and daily lows are located from the previous day, or really the previous 2 days. So you understand where your targets are going to be. So you understand where markets are going to when they leave from a bearish direction and from a bullish direction. So that's what I use to manage my trade.
Right. Okay. is there any particular book or research you could share with the community?
From a book perspective?
Yeah, for example, from a book or a documentary or something.
I don't know whether it will be directly. It won't directly impact your trading, but what it will do is open your mindset to the world. So it'll allow for new information to come in. So I think I posted it in the room. I said the book by John Perkins, Economic Hitman.
Right.
So you will understand it'll give you better understanding of how geopolitics and finance are married together.
Oh, we will definitely share this in the community. Absolutely fantastic. Yeah, I really you made a very, very good point. And what I personally did was I was obsessed with documentaries. So on YouTube you have a few YouTube channels as well with a lot of different documentaries and biographies of like big institutional traders, hedge fund managers, that type of get me really, really exciting. So I'm definitely will share also a lot of these in the Discord. So this is actually a question that Cam also asked me, and I'm very, very curious towards you as well. Walk us through your worst trade.
Man. Let's see. What's my worst? It's been a while, but
that's a good sign.
Yeah. I would say cattle futures probably was my worst trade ever. Betting on cattle futures.
And was it over leveraging yourself, or was it did that this has to do with your risk management? What was the actual?
That really taught me a powerful lesson about risk management and allowing my emotions not to get the best of me, just releasing the trade. So yeah, once that happened, I learned a powerful lesson about risk management. It's one of those things I struggled with before, and then that experience forced me to always use stop losses religiously, no matter what.
There we go. Yeah.
I don't do mental stop losses anymore.
Yeah. And same counts probably also for moving a stop loss, right? After you have placed your stop loss.
Nah, I never move stop loss. Once they're set, it's like concrete.
Yeah.
It's set in stone.
Yeah. Very, very important, because otherwise you keep moving. And I know I personally did it before as well. I kept moving my stop loss up and up or down and down, and I just I didn't fully get it, and I just saw it wrong the right way. This is where it should have been, and so on and so on. So in the end, it definitely messes up your risk management right there. So
absolutely.
Absolutely amazing. Let's see if we have some questions in the chat. Absolutely fantastic. So we have Emma saying, what is the biggest regret you have when you started trading?
None. I've made all my decisions that I've made, they're informed decisions.
Exactly.
So, and typically I'm probably a person that's not quick to make a decision, but it will always be for the most part, it's going to be the right decision. So it won't be quick, but it'll be right.
Right. Any more questions, guys, for James?
I know you said, I don't know whether anybody's interested in the VIX correlation. So.
Yeah, absolutely. Yes. I wanted to actually go over one or two more questions, but let's go over that. No, I think you're right. I think that's absolutely fantastic. So, indeed, what we're seeing a lot, especially when I sometimes check on the Discord, is the volatility index, right? So, indeed, can you maybe lead us through that? What is the reason for the volatility index? Where are you using it for? I know it has a correlation with the indices as well. For the people on YouTube, Yeah, we have your screen. We're seeing your screen right now. Maybe you can show us or explain something about the VIX right there.
Yeah. So you have the mini VIX futures, and then you have the VIX, just the normal VIX futures. So here on the screen, let me take some of this down, just so we have some perspective for everybody. Oh yeah. One of the things we understand. So this is something that was taught to me when I first started technical trading, which is correlations. So like various correlations that you can use to help identify market direction.
Yeah.
And ICT is really big on these correlations because he used to work on the Chicago Mercantile Exchange. So he was a floor trader. So this is where, as professionals, correlations is a part of the baseline of your overall analysis, so you understand market direction.
Yeah.
Or not want to say negative correlations. Let me be specific too. So what the VIX is, it's they call it it informs you of what kind of what the crowd, where the crowd is in terms of them being they call it the fear gauge. So what that basically in a nutshell is basically is VIX weakening or is it strengthening? So the VIX has a negative correlation with the Dow, S&P, and the Nasdaq, the Russell, and the correlation ranges between negative 0.80 to negative 0.85, depending where you are in terms of the year.
Okay.
But so there's an 85% negative correlation between VIX and indices.
Yeah.
So what that allows for us to be able to do is understand that if the VIX is going down, then typically the indices are moving up. So what we typically in the voice chat, what we really are preaching in the beginning of our analysis, we want to make life easy for us. So we're covering many things with one thing. So the VIX is responsible for moving 3 things. So let's go and do our analysis on the VIX first. And then we have an understanding of pretty much how the day is going to go. So, and what do I mean by that? So let me bring this up. Use I know in the chat, a lot of people like the NAS. Like when I came into the room, that seemed to be the indices of choice.
We have a direct correlation between James and the Nasdaq as well.
right. Right. Absolutely. So I just want everybody kind of to see, so you visually can see for yourself.
Yeah.
The mirror effect.
Yeah.
Of sorts.
Yeah, absolutely.
So we have NAS moving up while price is moving down. But you see when they change, they created a change of character here. This is what we were talking about in the room between last Friday and now.
Yeah.
Is that there's a change in character in the VIX because we have the lower high being taken out, we have a lower low created, and then price continue to move up.
Yeah.
So these are all daily bars. So not to and not getting a little bogged down in like the weekly cycle and everything like that.
Yeah.
But just basic visually, you can eyeball and see, oh, okay, price is moving prices, there's a changing character of the VIX, so they're strengthening. So what I was saying in the room is that, hey, they've just created a change of character. So expect price in all the indices to be bearish from a macro perspective, because when you have a change of character on a daily, they didn't just do that for fun. They did that because there's an intent going into winter. So this is a correlation, this direction in the VIX is something they're going to maintain from a macro perspective. So what that allows us to do is kind of eliminate one half of what we have in our file cabinet daily. So it doesn't mean that you don't still you don't still trade bullish opportunities, but you reduce risk exposure. So if you're risking, let's say you're risking 2%, when you see a bullish opportunity present itself, because you know you're in a bearish trend that's beginning, you want to cut risk in half and say from 2% to 1%, and that's where I'm going to do whenever I see bullish. And then when I get an opportunity to go with the trend, the macro, the larger trend, now you return to your normal 2%.
So is there also, this is the daily chart, so do you also narrow this down to let's say the 1 hourly, or is the daily the standard bias you always look at?
Nah, this is the beginning of the bias to look at. So we usually we'll drop down, and I actually put in some of the like Asia, so we could kind of dialogue a little bit about how Asia box and how we use it. Because earlier today we were kind of talking about it, but we were using it in gold. So we have Asia, we have we have the 8-hour. So this 8-hour printed on, what is this? This is Friday, Thursday, Wednesday. So once this 8-hour prints as a lower high on the 8-hour, we can drop it down to, my favorite is the 4-hour. But once this printed, I have temporary bearishness. So once price, I see higher low to a lower high, and I see this lower high print, and it takes out this higher low. Now this is toward the middle of the week, so I know at least for 2 days I'm going to experience bullish behavior. You see, because price is moving down, it has to move down to an order block, and so there's an order block here. So because I can see that, I can just go over to the NAS, the S&P, or the Dow, and now I'm only looking for pullbacks or higher lows, pullbacks into imbalance, or pullback into an order block. Does that make sense? I hope.
Absolutely, absolutely. So is it that you use the VIX as a base foundation whenever you start out looking at the indices, and then from there you have a confirmation from the VIX, then you can start looking at the Nasdaq, the Dow Jones, and the S&P 500, and from there you can then kind of make a decision over time which one fits you the best at that particular moment. Is that correct?
This is absolutely correct.
Yeah.
No, and we do that, and we do and we put in our Asia box, so we know if price takes out, we're just using kind of a little bit of information here. If price takes out the Asia high and the VIX in London, well, then I'm expecting that there's going to be a drive to the Asia low and the daily low of the previous day. So that's what I expect when I'm drawing these little Asia boxes here. That's what it allows me to be able to trade with anticipation. So that removes the fear, because this same process repeats all the time.
So is this a perfect way to combine with supply and demand, in your opinion?
Yes, you definitely can use supply and demand. But I typically use it with the order blocks. So for me, it's more, and it's not the order blocks to me based on the time frame that I like to participate in.
Yeah.
It allows me more immediate reaction and gives me greater understanding, because I think of supply from the perspective of I'm doing my macro analysis. You see what I'm saying? So supply to me is works well in that space, but then I need to understand where am I going to and where am I coming from. And so order blocks allow me to do that. Like today we were talking about how when you have a bearish order block that you're going into and the order block is rejecting, well, my expectation is that you're going to have bearish stairs being created. If you understand what you're looking for visually, you see the bearish stairs being created, so it allows for entry on pullbacks into your order block. So once this is where you're understanding the SMC framework or the ICT model framework. So that's what I said. When you ask the question, what is a good space for everybody to start from? Well, understanding what creates the move. So that's why I started with distribution and accumulation. This is the institutional creation of a move. So you need to master those levels with what you see visually, and that works into the process that you talk about with supply and demand. Because once supply is taken, supply has to be taken and moved someplace else, and you need to marry the supply orders with demand orders. You need to marry demand orders with supply orders. So that's where why I say that from a macro perspective, yes, you can use it with supply and demand, but for precision, like super precise, you want to understand how order blocks work in combination with that knowledge.
Absolutely fantastic. Wow, this is a beautiful, beautiful example. One of the, it's super, super clear. And I think we need a lot of time with you to understand the full process, but we have accumulation, the distribution, then we start, writing down our notes. Also very, very important what we discussed today. So we are there. We are consciously aware. We're sharpening our knife. And then absolutely, this tool is absolutely, absolutely fantastic. So for the guys that didn't know what the volatility index is, absolutely incredible. James, thank you so much for this conversation. We're going to have many more conversations coming up as well. Can you briefly explain the people in the chat on YouTube, that maybe the new people that are not in our Discord yet, what we are doing in Discord, and what is your experience so far?
What we're doing in Discord was really trying to expose as many individuals that have a yearning to learn how to trade from a technical perspective, and without having to pay, and then the knowledge is there. And we're building a brotherhood and sisterhood within the Discord, so it doesn't seem like such a journey done alone. So you don't feel like you're isolated in your intellectual walk or your trading career.
Yeah, for the guys that are maybe not don't like to talk in the Discord community, can also chat in the member voice chat, right? There's always we always try to answer that as well. So there is absolutely fantastic. There are so many good comments. James, thank you, James, very helpful. Thank you for sharing. He has great wisdom, which I respect. Good explanation, great wisdom.
Man, I respect you.
Where can I find your indicator,
You're like
James?
the Pied Piper. We just came. You up here blowing the flute. So we all are coming.
Yeah. I'm extremely grateful, bro, to have people like you in our community that that can also help internally, so I can also work on the external front as well, and building this community out. So great teamwork there, my man. We're gonna have many more conversations. I would love to repeat this with you, anytime soon, whenever we find something new, whenever some new people in the chat as well. And we would love to get to know you better over time. James, my brother, thank you so much for taking your time, and in general taking your time on a daily basis. Absolutely fantastic. Give a big applause for James, ladies and gentlemen.
Thank you, everybody. Thank you, my brother. Thank you so much.
Thank you, bro.
It's a pleasure.
I'll speak to you soon and keep crushing
Indeed.
it. All right?
All right now. Be easy.
See you. Bye-bye. Thank you. Wow. That was James, ladies and gentlemen. That was James, our yeah, like you guys said in the chat as well. A lot of wisdom, and trust me, I can already tell you this. This is only a fraction of what this guy brings to the table. I'm telling you. We're talking about accumulation and distribution. Hope you guys picked up some great information there. If you want to, learn from him, he is in the Discord group on a daily basis. You can join the channel. You can be there. You can just join our channel. We have, I think, hopefully unlimited amount of people that are allowed to the channel. I'm not sure. Could be 100 people as well. We're filling up nicely. But, over time, I hope to see more and more people like James as well into the community. And I see already a lot of potential. We almost have 2,200 people in the Discord group right now. It's absolutely fantastic. So we have a bright future ahead of us, guys. If you want to join, feel free. Our link is in the description. That was James. We're definitely gonna talk with him more often. Bring him to the stream. But if you just want to talk to him, he is always in the voice chat during the New York session. All right. Thank you guys for listening, for sticking with this short introduction. We'll definitely get to know more in the near future. So let's go back in the charts. We have missed some stuff right here. So really nice. Let's see what we can see right now in the charts as well. Definitely, guys. Also the VIX, indeed, take that in consideration. Do some research yourself as well about it and the correlation, the 85% correlation with the indices as well. Very interesting, and it's a very good way to spot potentially a correlation there with the Nasdaq, for example, that we have been looking at, a chart that we are finding extremely interesting right now at this particular moment. So we can definitely start integrating this as well, and yeah, looking forward to that. In the meantime, we have been dropping tremendously right here. It's absolutely incredible. So we have taken out some liquidity right here. Absolutely. Look at this trend line right there. Was building up with liquidity. I remember we were posting this yesterday. And there we go. So we have taken that completely right now. I think we're going to come down to the area of demand. We saw the VIX coming up indeed. So what happened with our other positions right now? We know that the DXY was coming up. Okay. The DXY was coming up right now to then eventually... dropping, coming back down one more time. So let's say we use this area of demand, supply right here, tapped into that zone, and now we are there at this specific moment. We create this as a level. Let's see what we can do. Let's see what we'll see for GU. I think potentially, yes. Okay, let me check to confirm, but I think so. Yeah, most likely we have been stopped out on a position. That means that we've cashed out 50% right here. This can happen. Therefore, we manage our risk as much as we can. All right, profit is profit. This is absolutely fantastic. So yeah, let's move forward right now with the other trade opportunities. Are there any trade opportunities you guys are looking at right now? Let me know. His name in the Discord channel is the voice chat moderator. Okay, he's easy to be recognized. He's the only voice chat moderator. He has a blue name. His name is IBOM International 1226. All right. If you want to send him a message, I would highly appreciate that. Re-entry on GU. Also got stopped out on GU. Yeah, I will mention this very soon in the mentor charts as well. Very important. KHR Bitcoin. Yes, we can. Let's have a look at Bitcoin. I'm also wow, look at that. Look at Bitcoin right there. Look at the liquidity that has been taken out. There we go, guys. Back at the 20,000 right here. Okay, back at the 20,700. Yeah, so we went down. We absolutely went down right here. So yeah, very interesting. Let's have a look at the 15-minute chart right here. And yeah, this is absolutely a massive expansion. Okay, expansion to the upside to then come back down all the way. What does it indicate, guys? I'm curious. What do you think that indicates? Okay, when we break structure to the upside to then immediately show a change of character to the downside. What do you think could be a reason for that? Jared says liquidity grab. Baxter says liquidity grab. I agree. Absolutely. Yeah, so we took out some liquidity here to then immediately reverse price and come back down. So this is how the game works, guys. This is what we're constantly looking out for. Where is the next liquidity grab? Where is the next hunt for liquidity? Why is liquidity so important? Big institutions, big players, they need the liquidity in order to move price. All right. Akashi says I had to take a sell position on EU that I'm still in. Let's have a look at that. That's great. Great entry there. There we go. Big money needs big positions. Yeah, absolutely, my man, absolutely. So potential further downside for Bitcoin right now. All right, potential further downside for Bitcoin. We completely broke structure here. This was a significant zone right there. Let's see what will happen when we're playing out. We still have a massive gap, of course, here right there. We are actually coming under an area, a very important area of support here. You know, look at that. We have support here, we have support here, resistance there, support there. Crucial level to take consideration right now. So yeah, we have this zone. Let's say if we come back up potentially and we can come back down potentially, yeah. Looking for retracements, right? Retracements to fill up the inefficiency. Let's have a look at the EU, Kasia, indeed. Let's have a look at the EU. If you took a great position there, please let me know. Also, look at that. Look at the Ethereum trade from yesterday. Look at that, guys. EU, all right? EU. Let's have a look at the EU. Yeah. Yeah, great position, great entry. I think that there's more downside potential personally. I think that you have at least, you need to check what will happen at this particular area right here. So this is a 30-minute order block right there. Very important order block. Okay, so it's exactly at 0.99689. I think this is a crucial level. We have some imbalance underneath that zone. We have some liquidity built up underneath that area. However, this is a crucial level to look out for. So if you've entered here, then amazing trade. Amazing trade. Liquidity built up underneath that zone. So let's look on the 5-minute. Here we go. Right there. So I really think that the 30-minute order block is the suitable order block for a potential, you know, retracement or you know, potential reaction. So great. Are those zones and fair value gaps coming from Sonar Lab, bro? No, but they have it. So let's say we have it. You see all the imbalances there. Yeah, indeed. All the imbalances are there. are marked out as well. GU, yeah, GU. So we got stopped out on break even for GU. We cashed out 50% of our position. So the question is, are we looking for retracements right now? I would be always a little bit careful whenever we are normally tapping into an area of demand multiple times. However, looking at the chart here, we have to also look at the DXY right now. So let's have a look at the DXY. So we saw a clear reaction from the DXY here, right? We came down. So yeah, potentially, yeah, it actually a potential opportunity, because the reason why is also because of the imbalance above that range, above that area, and it was quite of an abrupt, pullback down right there. It was kind of a significant down right there. Look at that. So right here and right here. Look at that. It's looking good. I like it. However, I see a smaller order block that piques my interest right there. That piques my interest for sure. So let's have a look for this one. US30 buy right now. Personally, I would not look for any buy right now for the US30, even though, yeah, massive gap here. We can definitely come back up to fill it in. But in general, I personally believe that because we came under the point of control of this complete area of consolidation. That means right now, our support, right here, we saw the support before we took off, becomes resistance, right? So I really don't like to see this area of resistance, especially of this strong area of consolidation for, you know, a significant amount of days. This is an area of consolidation for around 10 days or a little bit longer. And if you just come under the point of control right now, then this can turn into an area of resistance. So I would not look for any buys at this particular moment. If you do tend to come up and we break above this zone again, then I would start looking still for sells and be patient for the opportunity that plays out there. Gold. This was for how long? Like 2 minutes, 3 minutes? I hope you understood what I said. Reading my lips. All right. So yeah, that's what I mean. No. So if we do expect the DXY to come back down a little bit, we expect the gold, of course, to have an inverse correlation. So to potentially come back up. So we have this area of demand here. It's a 6-hour order block. All right. However, keep in mind that we have liquidity built up underneath that zone. We have a pretty decent gap underneath that area with another area of demand. So the moment we tap into this zone, we want to see what the reaction will be. Therefore, we cannot just randomly, you know, enter our position here from the get-go, okay? Anthony says shorting EJ looks good, my man. Yeah, this is indeed the area we were looking for. So this is exactly playing out right now, so that's great. Tapping into that zone. Beautiful reaction from this area. Great, okay. Looking good. So, I love the reaction here. So let's zoom in a little bit. Okay. So liquidity is getting built here though. Out of my personal opinion, so like from my personal experience, and this is what I've noticed a lot personally, is that if you're starting to range like this and we start to accumulate down slowly and we're seeing clear trends getting built, then most of the time we suddenly can shoot up right there. So there is liquidity underneath that area, absolutely as well. Look at that. But I'm curious how they're gonna approach this. So if we create a significant lower here now, we take out that liquidity, right? Right here. And we break a significant lower low here. To come back up, to then retrace up into this area. So we're looking at then particularly this range right here. You know, to see what reaction is there to potentially look for an entry. So yeah. If we come back up right now, it will be better if we come back up right now, okay? That could give us more confluence to come back down. Wow. Strong reaction from EJ. EJ, a very, very strong reaction here. Yeah, I do like this. I do like this this order block here. Very clean. We saw the expansion here on the lower time frame. Point of control is getting hit now. Mitigated. We've built up the imbalance here. We have a gap there. All the imbalance is filled above that range. Coming down. Coming up. Look on the 3 minute, I really like it. The reason why is I see clear rally based drop. And beautiful market neutral candles there, and it fits perfectly. It aligns perfectly with the 5 minute order block as well. And the overall bias was indeed, for me personally, initially bullish, but now I see that there is a lot of liquidity built underneath that range, and we still have that liquidity or that fair value gap under that massive untested area of demand. Unmitigated area of demand still that has yet to be mitigated. So personally, looking for an opposite trade direction right now, looking for an opposite trade would actually make sense to me. And the reaction here is very, very good. So I do like this now as a short rather than a long, and then potentially see what we can do after that. Lorenzo, quick question. What time do you start your analysis? It totally depends. I need to see from, like, of course, always the 8 hour, the 4 hour, or the daily. One of those. To see what we can... Okay, German 30, US 30, and then we're gonna go over really gonna nail down exactly the trades we're looking at, and then really make a decision from there before we move further, right? So a few more. US 30, we have looked at. I personally like the Nasdaq the most. But still, right now it doesn't make sense. The Nasdaq we have discussed already. We came under the point of control here, so this does not really make sense right now. Potential reaction if we come back up is beautiful. I really do like that. I really do like this order block here on the 1 hourly. Beautiful reaction before that massive drop. So we're gonna see a beautiful reaction here. Also here, these are one of our favorite setups. All right, but this is not gonna happen today. Okay, this is gonna happen later. Would you consider a chuck in an imbalanced zone? You mean something like this, bro? You mean something like this? Or what do you mean? Danisha is heading out. Thank you for an amazing stream today. Take care. Limitless fam. Enjoy the weekend. Danisha, enjoy your weekend. Have a wonderful weekend. Take care. Take it easy. Reflect. Have a wonderful time. And I'll see you later. Thank you. Three Puck says definitely going to be a gap up this weekend. I agree. Definitely. So Canadian dollar Swiss franc is really nice. Has all the layers for me personally. However, not gonna be today. However, beautiful setup. I really do like it. We did not see the confirmation on the GJ. So we came back down as well. So we're gonna look for an opportunity later on for GJ. We have the Australian dollar, Canadian dollar. We have seen the reaction here. but we have never mitigated that exact order block right there that we were looking for, and the point of control. Especially the point of control is important there. So I see a lot of you guys saying the USD cup looks nice. There's one more gap above this range here. But no. I personally believe that we have yet to fill up a gap here above that area. And we have accumulated a nice double bottom here to accumulate and to push price upwards here. In combination with the DXY holding relatively strong and not creating a significant lower low structure. So for any short now USD cut, I would be careful. I would be careful for a sell right now. Of course, the massive explosion is great, and this looks amazing. This looks beautiful. So the reaction here is amazing. So there are many opportunities coming. Amazing. A lot of different setups you guys will look at today. Normally it's quite aligning, but today it's a lot of different ones. We have, you see, USD CAD, G's, GBP, Swiss franc, Australian dollar, US dollar, UG, GU, EG. The eurjpy, Canadian dollar, Swiss franc. DJ is one of them I take consideration. Australian dollar, Canadian dollar. Australian dollar, Canadian dollar. Yeah. Yeah, Australian dollar, Canadian dollar looks good. Looks good. GJ, we're looking for any longs? Not yet now. This is invalidated here. We didn't see the confirmation. We're taking out liquidity here now underneath that range. I think they're going for all the stop losses underneath this area, as we only have taken all of them here. So yeah, then somewhere in this range would make a lot of sense here. Beautiful order blocks as well. Beautiful. So yeah, this one is nice. Let's say taking out all the liquidity here beautifully. tapping into that zone, and then look for the new reaction here. So GJ, I like the Australian dollar against the Canadian dollar. I like Canadian Swiss franc. It's my favorite so far. EuroJPY, I want to see a confirmation right now. USD Swiss franc came all the way up. Fill up the imbalance here. Oh wow, that's crazy. Look at that. Look at that. Look at that. Even though we built our liquidity underneath the range, we tapped to the zone and came up immediately. Super respected. So of course this liquidity had to be taken out. That was a no-brainer. When you see these wicks right there, look at these wicks there. You see that? If you spot this, guys, and you can form a clear trend, man, I'm telling you, they want to grab that. They want to take it. It's like a dessert. That is, yeah. I must say this looks really good. The reaction here right now, the trend here right now, this is a super important level. You see that? Extremely, extremely respected. So support, resistance, resistance, we support here. And that is exactly the last low as well. So if you can break that and come back up, we're seeing the same thing, man. Same thing. Break of structure here, beautiful area of consolidation. We broke out the highs, and then let's say if you break down to the lows, then that's exactly what we're looking for. So the most important zone is right now also this area of demand here. So we have to break through this. We have to break through that. 100%. If we do break through that and we come back up, then potentially we can do something unique. This is not what we're not doing that much. But what I also like to do sometimes is coming here, coming back up, tapping into that level, stop loss above that zone. Because there is a clear area of demand above a strong horizontal level here. So because that is the case and we come back and tapping into that horizontal level, I can put my stop loss above that area of demand. I've done this many times, and I had pretty good results from that, or pretty good reactions from that. If you do tend to break though, break through it right now. Well, Lorenzo, what time frame do you use for the confirmation? It totally depends, my bro. It totally depends on the current state of the market. Many different layers involved there. Absolutely. Okay, I'm really gonna scroll right now. If I cannot find a direct opportunity in the market right now, guys, then I'm not gonna take any oppositions. I'm not gonna force any trades, especially not on a Friday. All right, so let's really have a look at if you can find something. If not, then we're just gonna look at the best possible setups for Monday and discuss these. All right, and then yeah. So yeah, this is super clear. Super clear. We have this range. Let's say this is the complete swing high, swing low here. 50% right there. Yeah, so then this is definitely the area we have to look out for. So higher time frame as well. Yeah. Okay. Person says news scares me. Yeah. That's why we like to wait for news to be over. And we like to anticipate on news. So we like to actually react to the news later. So let's say the news has been done. We see massive expansion somewhere. That's the moment when we're looking for the retracement to fill up inefficiency to then take our position. So it's actually great. News is amazing because news gives us opportunity. News generates price action, leaves us with inefficiency in the market because they're looking for the liquidity. If the liquidity has been taken and they retrace back into the zone to fill up the inefficiency, then we can take our position. So we want to see news. This is exactly the reason why I like to wait for the news to be over rather than to trade news personally. Okay, let's go over some charts. Just to clarify right now, if you're seeing something. If not, guys, then we're not gonna force anything. Okay. We cannot be trading like that. We cannot be trading like that. This month was a relatively good month. I expected a little bit worse, to be honest, due to the, the holidays and everything, and the first 20 days of the month was nothing really spectacular. We had like a 9R. We all had a 30% win rate, which is good, which is fine. However, the last week was very nice. The last couple of 7 days was very, very nice. We had a beautiful GJ long and a few other trades that we took that were actually very, very good. Don't know how some people only trade news. Yeah, the only thing that I like if I would trade news, right? And I want to, and I have to trade news. I don't want that, but let's say, then I would look for liquidity. Where is liquidity built up? All right, where is liquidity built up? Because what we saw in the stream today were a lot of liquidity hunt, a lot of liquidity sweeps, right? Or liquidity grabs in the market. So yeah, daily level. No, not a trade opportunity here. GU coming down. Okay, that's why I have a stop loss on break even. That's why I closed the position 50% at target 1. There are a few more setups we can look for. One is the DAX. I don't know if you guys know that. The DAX is very, very nice, looking great. Massive expansion, inefficiency. This is what we like to see, guys. You know that. Consolidation, expansion, retracement. So here we go. Beautifully clean. Super clean. All right. Boom. Continue our short. Many short opportunities lately. This month. So use 100, you guys know that right now. We can wait for the retracement. Will not be today. The UK oil maybe. Crude oil I would trade. I would trade crude. I would take crude. So I will add this one to the list and I will leverage that and talk about it later before we close the stream. No. Okay, guys, to be honest, I have to be honest, I'm not going to force anything today on a Friday late as well. Significantly, market is closing. London is already closed. The New York session is closing in a few hours as well. So I do not think right now it is that smart to look for any opportunities in the market. Absolutely. So we have a lot of opportunities out there. Don't get me wrong. A lot of good solid opportunities. Canadian franc against Swiss franc is really, really nice. Eurjpy is really nice. Okay, so we're gonna now filter out some charts here and discuss them, all right? Okay, there is maybe one opportunity now. Could be one opportunity right now. Like EG. Euro against the British pound. When do you do the 24-hour live stream? When we hit the 10k subs. I think we're gonna do it. 10k subs. We're getting there faster than I thought. To be honest. So yeah. But yeah. I'm a man of my word, so Yeah. Hey Lorenzo, how does one avoid fake change of characters or identify when a fake chalk might happen? Yeah, so like I personally, if you want to know exactly like fake chalk, I'm not sure really what you mean with that, bro. But like, I use lines sometimes. Okay, lines are really helping me clearing things out because charts or candles are very messy. And especially for structures, market break, market structure in general, I tend to use lines and I feel that they're very respected. Very respected. It higher my probability a little bit. We're using lines rather than using wicks, for example, or candles. So unless you're not significantly coming down and coming up right now. So yeah, okay, guys, I give you some potential trade setups right now. However, minor. Okay, the reason why for today is because it's Friday. Markets are getting close. The volume is gonna calm down right now heavily as well. Keep that in mind. And you don't want to always hold your positions over in the weekend as well, because if the Monday open comes, and sometimes it happens. Massive explosion. I've seen it many times and it can be very dangerous sometimes. So some people don't even allow you to actually trade in general. Some prop firms don't even allow you to trade in the weekend or hold your positions over in the weekend. So if you are funded, then please be careful with that as well. For the rest, there are some setups I'm definitely looking at, okay? For Monday now. Canadian dollar, Swiss franc. Really like it because I've seen a massive expansion on the higher time frame. Coming down all the way. We finally managed to come back up and we created a beautiful structure on underneath that area of supply. So the premium area of supply. Alright? We created a chalk right here. Beautifully as well. Great reaction. So I want to see this massive gap, and this is a 2-hour gap. However, this candle is not closed yet. This is not confirmed, but a 1-hour gap is confirmed here. Massive inefficiency there underneath that area of supply. consolidation, the expansion, the retracement to fill up the inefficiency, tap into our point of control to then mitigate this area of supply. A beautiful order block as well. Target, you know, potentially if you come up right now, areas of liquidity here. This area of demand, right, to see what we can do. This whole area of consolidation will be triggered, will be mitigated. So that's quite interesting. So let's see what happens there. That could be already a 5-to-1 opportunity. I of course target this whole thing, but this area is the most important zone, which we have to look out for, which is this area right here. This candle specifically, right there. So great opportunity, great chart, looks fantastic. So for Monday, this could be a great opportunity. All right, that's one of them. Why do you trade Canadian dollar, Swiss franc? You're trading two commodity currencies against each other. I always trade that, and it works very good for me personally. I had great results with these pairs. So I don't know. Sometimes I think that a lot of people get fooled by fundamental analysis too much as well, and I think the correlation between fundamental analysis and people understand that news and everything related to that is quite important. However, sometimes there is just a lot of manipulation going on, and you can benefit from the manipulation. So from the liquidity grabs, the inefficiency in the market, the expansion, the price action. And I think that it is still sometimes a little bit undervalued as well. But that's my personal opinion, of course. I respect everyone's opinion, of course, completely, and the way they approach the market in every way. So for GJ, this I've seen these type of pairs many times, and whenever I saw something like that, I really like what I see here. So also for you guys, really, first of all, a lot of trends here, right? A lot of liquidity built up above this range. We have a massive gap here. This is it's still far away. It's still far away, but we have a massive gap there. Okay. There is an efficiency there in combination with a beautiful, you know, trend. A lot of people got induced to go short here. And then also here, right? So we have never really taken all of that out right here. So I think there is a lot of liquidity above that area. And personally, I think that what we're seeing here is something interesting. And I've seen this also happening many times before we see massive expansion. So a very strong, you know, reaction here is that when we came, I show you, let me use the curve. When we're coming down here and we're seeing that this is happening right now, then what I like to see is when, especially when liquidity is built on the higher time frame, such as, you know, the 4-hourly right here and the imbalance right there, I feel that whenever we tap into a zone that we can suddenly massively expand to the upside to take out these orders, you know, instant orders there tremendously. So that's why we talked already yesterday, I believe yesterday's stream, we were looking for an opportunity for GJ to actually target these areas right here. Okay, at some point we feel like it's gonna come there. However, now it's about timing the market and about timing exactly the entry right there. Okay. And because we're using a solid risk management, we can allow ourselves to, you know, get stopped out also sometimes. So we do not have to always catch the perfect trade. But whenever we see something like this on the, you know, higher time frame, I really do like the curves that I see. We're going from a downtrend to suddenly starting to consolidate here. knowing that there is a lot of liquidity for the grab there to potentially come up. So yeah, I have a very, very close eye on GJ. And yeah, definitely looking for a long there. Carlton Johnson says, I just discovered your live stream. This is great. Do you start again on Sunday when the market's open? If so, what time? Great question, my man. Thank you so much for being here, man. Welcome. So, because I live in Bali, Indonesia, I tend to not, of course, trade on Sunday because, yeah, I live, 12 hours ahead of the United States, for example, already. So I start most of the time with my streams on a Monday, and then the Monday till Friday, I'll try to stream the New York session. I'm gonna integrate the London session as well for some people in Europe and some other interested people that are trading the London session a lot. And I feel like that my personal trades also reflect a lot in the London session, so I want to trade more actively as well. Therefore, live. So therefore, I'm gonna do 3 times a week the New York session, 2 times a week the London session. If you want to know exactly what I'm doing, my man, Carlton, then you can follow me in the Discord, in our group, in our community, and I'll let you guys know there. Eight-hour live session. That was a record. That was a record. So I'm gonna, yeah, my plans for the weekend. I'm gonna cut off the stream, guys, soon, right? I will send all the Discord the charts I'm looking at right now with the explanation in the Discord channel, in the mentor charts. Unfortunately, yesterday, we missed out on some tremendous. Oh, look at the USD cut, by the way. We broke through this area of supply. So good that we didn't trade that one. By the way, very, very good news that we didn't trade it. Now we expected more potential, more upside there. But anyways, look at the USD against the Swiss franc. Unfortunately, we missed it on this trade. I need to really be sticky with my alerts now. I do not understand why I missed that. It's not usual for me. However, I explained yesterday's stream how obsessed I was with this one, with this particular chart. And it would have been our best trade of the month if I would not miss out of this opportunity right there. So that's a nice lesson. Always make sure I have my alerts on whenever needed. And yeah. Any plans for the weekend? I'm gonna chill. I'm gonna spend some time with my fam as well. I'm gonna, see Bali a little bit. Enjoy. I'm gonna work on some educational content as well on a Sunday, and I'm gonna release it on this Sunday as well. Sunday will be a full day of work. Tomorrow I'm gonna chill a little bit, and absolutely fantastic. So thank you so much for being here, guys. It was a wonderful week. We had a profitable week this week. We will send the results, the analytics, also in the Discord group as well. This week was nice. Very nice. We catched up definitely this week in regards to the 3 weeks before that. So the beginning of August till now. Definitely catched up. Very, very great. So if we keep moving in the long term with the right risk management, with our approach, the way we pursue the market, the way we not overtrade, the way we are very picky with our setups, but we have our rules for that. So I'm going to release a lot of stuff for that. I'm going to release the ebook as well with all the confluences, with aggressive confirmation and 3 factors. When to trade aggressively, when to trade aggressively. And yeah, I really like the short introduction of James, our voice chat moderator. Definitely want to see more of him in the future as well. We're definitely going to see and talk to him because he has so much more knowledge we can share, we can learn from him as well. And if you want to be part of the best community out there, guys, I highly recommend you guys to join our Discord. We managed to get over 3,200 people in. Absolutely insane. So fantastic. Guys, if you want to add on to the community and you want to help guys out that are maybe beginning traders and still want to learn, then please be active in the charts. Try to help them out, and would highly appreciate that. Because, you know, the more people we can help, the more people, you know, you can help, and so on as well. So let's do it together. Was a fantastic stream. Fantastic week. Great setups. Let's make sure that we are, you know, ready for the education on the Sunday. I'm going to give you guys the Sunday weekly breakdown with all the charts we're looking at. Don't worry. We're going to go over everything when the market closed. I'm going to analyze all the charts. Sunday, I have a video for you guys, an unlisted video on my YouTube channel as well. Gonna go over the charts, the setups I'm looking at, so you don't have to do, you know, you have to do always your own research, but it will definitely save you some time. All right? Much love, guys. Have a great weekend. I need my man. Lots of love, bro. Red November. Have a great weekend. Loin Void, you too. See you Monday. Lorena, thank you. Anye Dika Chukwu Okudi. Thanks, man. Hard to pronounce your name. I will learn. I will learn. Ramis, love your content. Quick question. How do you show the volume profile? Oh, that's the fixed range volume profile, my man. That's the fixed range volume profile right here. We look for an area of consolidation. Then we tap it from the left to the right and you see it right here. The settings are in the description. Okay? Ahan, have a nice weekend, brother. Carlton, my man, have a nice weekend. Tate Husbands. Thanks for tonight, bro. Was a bit quiet. No worries, my man. You're chilling. Hope Thailand is treating you well, man. Aider says love from Pakistan. Have a great weekend. Thank you so much. Thank you, bro. Aider, thank you for the support, bro. You are a real legend. I feel your support, brother. I see you, man. Ahan, Ifti, Petro, man. You were there from the beginning, brother. Absolute. Gee, we're gonna help you out, brother. We're gonna help you out. Petro, all the support, all the input every single day. You deserve it till the max, man. Absolutely, bro. Akasha, enjoy. Have a wonderful weekend with the kids as well. Have a wonderful weekend. Great EU trade from you. Great Euro trade. Good job. Amazing. Bill, thank you, brother. Mother, George, Loinvoid, Tony. Loinvoid says, I always will be here to support the family. Wow. Frank, thank you, man. Absolutely fantastic. Guys, have a wonderful weekend. Let's crush it next week. This week was amazing. Great setups, great results. Let's continue our journey together. Build out the best possible community out there. And much love. Peace. See you later. Bye-bye.